See my screen. Traders Exclusive. It's our live event strategy series for December 15th. Just type yes if you can see my screen. All right, cool. Excellent. This is Sherry. I'm your host for today, and I wanted to let you know that we are going to be talking about how to trade mechanically and emotion-free, 3 secret market conditions that predict big moves, futures trading for the uninitiated, and finding lucrative 10 to 200% seasonal moves. There's a bigger statement there, but Wally's going to tell us about that. Please check out tradersexclusive.com, where we regularly post articles and videos with valuable trading tips and techniques. We do the replays there. This is also where you're going to find today's recording. And before we get started, I'd like to share a quick disclaimer. You know the drill. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations presented here are subject to change at any time, and they're for educational purposes. Past performance is not necessarily indicative of future results. I'd like to ask you to take notes and write your questions down so that we can hold the questions until after the presenter is finished, unless they tell me they like to have interaction, and then I will make certain that they can talk with you. Our first presenter is Todd Bubba Horowitz of Bubba Trading. He's going to be talking about equity portfolios, and I'd like to just meet Bubba. He's the chief strategist at BubbaTrading.com. For nearly 40 years, he's enjoyed a successful career in the financial industry. He began his profession in 1980 as one of the original market makers in the OEX trading pit at the Chicago Board of Auctions Exchange. He has traded at all of the major exchanges in Chicago, and he's currently a member of the CBOT. In addition to his career as a skilled trader and investor, Bubba has spent the last 8 years as a mentor and educator to traders of all levels. He continues to concentrate on the education and training of would-be investors, teaching them the ins and outs of a professional trader. And you know what? As the founder and chief strategist of BubbaTrading.com, he manages the development and distribution of market content, product development, and trade ideas. And this part here I think is super, super cool. He's an advocate of financial literacy. He has also developed a program for high school students that allows them to learn and trade markets. In his own unique manner, Bubba delivers a clear, unvarnished take on the markets and his recommendations for navigating the often confusing world of investing. Always entertaining, never bashful, and rarely filtered. He will tell you insights about the market that others either cannot or will not. So let me just make you, okay, so first of all, Todd, Bubba, thank you for being with us. And do you like questions on the fly, or do you like them held to the end?
They can go on the fly, whatever anybody wants. I'm here for them. I'm ready to go, and it's either way. If it's important to what I'm discussing at that time, I'll answer right away, or I'll come back to it later. But if they get questions right away, I don't want anybody to get lost. It's going to be quick and fast, so let's let them go ahead, and I'll go on the fly with everybody.
Okay, so that means I'm going to not only make you the presenter, but I'm going to give you organizer status so that you can see the questions as they come in. Is that going to be okay, or does that feel distracting to you?
That's 100%. No, I do it all the time. It's all good. I'm ready. I'm ready to answer questions. Let me just pop out the box, and then I can actually see them. Where are we at here? It's been a while since I've used. There we are. Okay, there's questions. So you got questions, I got answers. Just fire them on in, and I got to share my screen. My presentation screen?
I'm not seeing anything yet. There we go. Well, I got a lot of spreadsheets, I think.
Okay, so you're on. Okay, so I'm on the wrong. Okay, I got it. No worries. I'll fix it right now. Hold on. I'm not. Again, I can't always know what.
Six screens is a lot. Yeah.
Yeah. So we're gonna go ahead and go. And now you should be seeing the presentation. Yes.
Yes.
Okay. That's okay. That's how it rolls. And I can't, since this doesn't identify the screen I'm using. It's always a gamble, but here we are. And Sherry, thanks so much. It's always great to be with you guys, and I appreciate it. And so we're going to go fast, guys. And so be ready. And again, you can always ask me questions now or later. I will always be happy to answer anything that you want to know. And you can ask me anything you want, including about my love life. But in the meantime, this is our algorithmic models. And, you know, I've been around for a while, but I'll also tell you what's going on in the economy, because we got a big announcement coming today at 2 o'clock Eastern from the Federal Reserve. And based on the way the markets are acting, I don't think it's going to be very, very appetizing. Real savings for real products, and it's time to take care of yourself. And one of the things we always talk about is show up every single moment like you're meant to be there. And of course, you get the disclaimer. You're going to get 2 in mine, because I got 2 presentations mixed in one. But in the meantime, again, past performance is not indicative of future. All I can say is I've been trading for 44 years. So, you know, take that for what it is, but there is always risk, and there's always the possibility of drawdowns. So I always start off explaining that markets, like markets, portfolios, they don't go straight up. There is always some bumps in the road. And as much as you think that they're going to go straight to the moon, they don't. Okay, you get hot, you get cold, they go up and down. The end game is to know how to use the drawdown to your advantage and know how to manage your capital so that you're in business at all times. Okay. And as Sherry said, I am Todd Bubba Horwitz, and I have been a member for 41 years. I contribute to all the major networks, and I trade every recommendation that leaves my office. I trade myself. Okay. If I don't like it, I'm not sending it. That's the bottom line. Okay. And you know, you are your own worst enemy. We individuals, emotions. Okay. We create more problems. Okay. Trading is a competitive business to begin with, because you are trading against others. Now, you're not in direct competition, win or lose, but you are trading what the markets are giving. And you have to look in the mirror and identify your own problems, because we all have them, and we all have a tendency to sometimes let our emotions take over. Now, what we do is we make money over time. Okay, we have done so for many years. I've done it myself, because I don't trade. I only trade my money. I don't trade anybody else's money. Okay, we only use a mathematical model. There is no choice. It is purely mathematical. It's an algorithm that we use. No emotions. We use our portfolios as one position, and every week you get a report of results. You get a report every Saturday morning that tells you how we did, plus or minus. Of course, you'll know already. We don't make false promises. We're not going to tell you there's miracles, because there isn't. It's that simple. There's no miracles out there. We don't do any false marketing. No unrealistic results. You will see exactly what results are. I don't predict or have an opinion. Although I have an opinion when I'm on air, but my opinion will always go what my algorithms are saying, and I never make excuses. I will come out right now, and I'll tell you right now, we were in a pretty big drawdown coming into this. So in reality, the algorithm has been profitable in real-time trading for a long time, and backtesting thousands of data points, it's just as profitable. Most of what is being promoted by other so-called gurus has not been traded with real money when your money is at stake. And of course, that's what we do pride ourselves on, that every trade that leaves the office, we are in, and I am in. Now, many people talk about market manipulation, you know, especially in the metals markets. And I'm here to tell you that, manipulated or not, it still takes 2 sides of a market. Okay. So if you're one of those that think of market manipulation, forget about it. Okay. Because it takes a buyer and a seller. You cannot create a market without both participants. So if one side's trying to manipulate, the other side's getting a bargain if they think they're getting in at the right time. You cannot do what people think they do. There's not that much power. They don't have that much money. So remember that a market is made by a buyer and seller, which is simply called price discovery. Okay. So don't let that get to you. And it's like my grandmother who used to like to go to harness races, and we tell her that the races were fixed. She says, well, maybe I'll bet on the crooked horse. Okay. So you got to figure out what your goals are. Do you want to make money, or do you want to be right? And that's one of the things we talk about, because too many people want to be right because they want their opinion to be proved correct versus just making money. And all we want to do is just making money, which is what our algorithm does. Okay, now we've got two methods of using the algorithm. We've got a day trading algorithm and a swing trading. They're the same one, they just change the time frames. Okay, and that's when you're trading, you are trading different time frames because different markets set up different ways at different times. So it's recognizing, but they're still designed purely by mathematics. There is no human emotion or opinion that goes into these. In fact, I run the algorithms at about 1:30 in the morning for the following day because I need all the results in, and then I run them, and if there's trades, I send them out. Okay, and if there's not trades, we continue to have what we have, and the day trading has to be auto traded by a broker we've partnered with because we can't get you the signals fast enough. They're traded and they have to be entered immediately, and they will be in the future side of the world. But if you remember the turtles and Richard Dennis, now Richard and I go way back. I traded with Richard in the 80s before he developed the turtles, and he was a member of the CBOE, which is where I started. And using a mechanical system is the best way to consistently make money trading. If you know that your system makes money over the long run, it is easier to take the signals and follow the system during periods of losses. If you rely on your own judgment during trading, you may find that you are fearful just when you should be courageous, or courageous when you should be fearful. And that was before the Warren Buffett quote came out. But that is Richard Dennis. And obviously the turtles, he proved that you could take anybody off the street, and if they could follow the rules and follow the program, they could make money. Okay, and he took all walks of life, from the highly educated to sanitation engineers. Now, trading and day trading is a math proposition. Okay, when you're trading and you're reading a chart, think about it from a geometry standpoint. If you want to, you are using numbers and metrics that create it. Now, we use something, one of the things that goes into the algorithm is what we call the phases of the market, because all markets develop different phases. But it always comes back to a math model, which again then takes your emotion out of play and keeps you in a position to make money. The more that you can stay away from your opinion, the better off you're going to be, and the more money you will make. Because we do not get out because we think it's time to get out. The algorithm will take us out when it's time. So we will let trades ride until they reverse. And in our portfolio models, the swing trading ones, which you're going to see, they are either long or short the securities that they trade every day. They're never flat, they're never out. They're either long or short. Now, two aspects you must have is you have to have a clear strategy and a plan, which we do. And it's got to, you want to be automated. Now, you don't have to automate if you don't want to. We have the option in our equity side. If you like to automate, we have a broker that we do business with, that we have their APIs that charges $10 a month flat fee for all commissions. And as a member, you don't pay anything to do the auto trading. It does it for you based on all of our specs that we built into it. And just a quick note, there's always this crying and complaining about high frequency traders when the markets go down. So what I'm asking you is, you think that high frequency traders are only sellers, or maybe they buy too? And I think that's a problem that we fall into by watching the media, because they're looking for news, they're looking to drive advertising dollars, not to benefit you. So I will tell you that in my 40 years, I've never read the Wall Street Journal. I've never read a copy of Barron's. And for the last 3 years, even though I'm a contributor, I don't watch the news either. I actually watch VSiN Sports Information Network all day long. Okay. But mechanical trading, look, the major reason that traders lose money in the long run is because they miss trades, they let losses runs in the trades are, and take profits far too early. Very important. I day trade every morning with my members, okay, or members of those things, and I try to remind them that you want to get stopped out of every trade. Stopping out does not make it bad. Stopping out means that the market has turned over and gone the other way, but you want to let it ride as long as you can. My method is none of the three, and therefore our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in any market. We do not let losses run. We always let profits run. That is because the algorithm was designed to do exactly those three things. Now, trading itself is a game of skill. And if you look around, okay, you see, if you ever watch poker on TV or you play poker yourself, that's a skill game. Now, you're not going to win every hand. You're not going to win every day. But remember, trading like poker, bridge, backgammon, or gin are all mathematical probability models that if you play the probabilities and you play consistently, you're going to win over time. That is exactly what happens. And it also includes sports betting and fantasy as well. But again, these are facts. These are not fiction. If you are consistent and you have a winning method, it's going to make money over time because you're going to grab the edge on the market. Remember, the markets are never wrong. Opinions often are. Now, I can tell you from experience, from personal experience, okay, that I've had some great opinions that have done very well, but it always ends up costing me opportunity costs later when I'm wrong. And it became easier to just let the algorithms, which I've been using for about 25 years, okay, to let them trade and not have to make the decision. So as a floor trader, and the only reason I got into this business, you know, the education side, was because there is no floor anymore. And that was going, the floor, although they really just closed, they've been really done for 10 to 15 years, because the minute they went to decimals and options and stocks, that was the end of it. But anyways, the markets are never wrong. Remember, if you're on the wrong side and they close and you're out of money, you're out of business. So don't ever think you know more than the markets. They are 100% right. Now, we are trend trading. That's what all we're going to do, is trade the trend of the time frame that we're trading. So in trend trading, price is everything. Okay? The news means nothing. Remember, today, in today's world, the news you get is already old news. You'll be the 1 millionth person to hear that news. It's not like it was in the 70s or in the 80s when information didn't flow as fast. Now, information, something happens in Russia, they know about it in California in about 3 seconds. Okay. You buy a stock when it breaks out of range, you sell a stock when it changes, when the trend changes. Don't get out before the trend changes direction. You stick to the system. Very important. Now, our objectives are obviously capital growth, security of principal amount vested, liquidity, diversification of risk, and consistent returns. It's pretty simple. We just want to, again, we know that the bigger money comes as we are able to grow our account and then grow our position sizing. And we have a very good mathematical formula to show you how to build organically and add to your growth when those things happen. Okay, that is what we're always working on, is the what about volume? Here, I'm going to go ahead and stop this for a minute. What about volume? What about volume at different prices? You know, that can be something that you would use in a day trading method. It's very little effect if you're using in a swing trading system. It means nothing. Or if you're trading in our futures algorithms that are day traded on an hourly chart, it has very little value. But on a short-term day trading, it has a lot of value. It often creates what they call a blow-off pattern, which is what we're actually looking for to benefit, because what you're really doing with that is you're benefiting on the emotion of others. Okay. What security types do you trade, and when and why? Well, those you'll see, and I will answer that shortly. Okay. I'm going to show you one portfolio right now, but rule-based. Now this is where I lose a lot of people. We have a very strict set of rules that you have to follow, because we know what works. And if you go off the reservation, you end up losing money. And I can tell you, over the years, I've gotten many emails. I forgot, I missed. And I go, please don't insult my intelligence. I know you took a shot. Okay. Don't tell me that you missed it. Look, you got to follow the rules. You got to make the trade, no matter how you feel. You got to make the trades as they show up. That is how you make money. And again, professionals trade by the rules. I've traded by the rules 90% of the time, or 95% of the time, since 1980. Okay? Because I know every time I move off, I get clobbered somewhere. Okay. So we go, why buy a stock when you can create a synthetic stock position? And that's how we use leverage in our equity portfolio models. You know, the key in this business is to be able to use leverage You don't want to over leverage yourself because that becomes very dangerous. You know, over leverage is great when you're making money, not so good when you're losing. Okay. So you have to be very careful. But of course, our portfolios are measured to calculate in the risk that we're taking. And that's when we get to the portfolios, you'll see that we have numbers that you have to meet with your capital to go into certain portfolios. Why? Because we don't want you to be over leveraged. We want you to be leveraged where you never have to sweat. You may have some losing days. You may go down a little bit, but we want you to not have to worry about it. And certainly we don't want margin calls, but we do use either the futures market, which is clean, or we create synthetic stock in equities. So if you're going to create synthetic long stock, you know, there are many ways to do it, but you know, there's only one way that I know of to do it with a very limited amount of risk. Okay. You know, as a floor trader, we didn't have the same margin requirements that we now have as retail traders. You know, now, you know, the broker, you cannot, basically you can't go 1 penny over your margin. All right. They're right there and their machine will shut you out. So we create these synthetic stocks. And for example, if you wanted to buy 100 shares of the spiders, okay, and again, it's just an example, we use more than the spiders, but if you wanted to buy 100 shares of the spiders, you would just simply buy a call, buy an at the money call, sell an at the money to put, and buy a put below. So what you're really doing is you're limiting the downside risk by the put below. You're also taking away, if you're familiar with cash secured puts or selling naked options, they require lots of margin. Well, here we have taken out that margin, and this trade to represent 100 shares of stock, okay, in the spiders is going to be a cost of $752. We're representing 46,200 in stock. Our maximum risk is 1.8%. Okay, think about that. Now you're basically taking off time decay in the options, but by selling the expensive option, and your risk is minimal. Now again, risk is risk and it adds up, but it is minimal, and it is, you're now leveraging up 46,000 with $700. Okay, and of course the short side of the market, because you know obviously we trade both sides of the market. We're not looking to be on one side. We want to be on both sides in this market. Okay, so we're always willing to short, and of course shorting straight stock is a challenge. You know, many times you get that sign, hard to borrow, if you've ever tried to short stock. It's a pain in the you know what, but we can create our own synthetic short. And here's, for example, in the IWM, okay, and here we are representing 100 shares short at 212, okay, for a margin cost of 666. Now that trade is exactly the opposite of the long trade. We sell an at the money call, we buy an at the money put, and then we have to go up, and we're using $5 away in IWM, and we're buying the 216 put. Okay, so we've now limited the risk to the spread risk, which is 500 plus the debit that you pay, which comes up to 666 or about 3.5%. Okay, so once again, you're representing, and you will benefit in full if you're right on direction. But if you're wrong on direction, you will not get hurt as badly as you would if you had the straight stock. Okay, and that is something when you're using a synthetic model. Okay, do you use or recommend portfolio margin? Yes, I tell you what the margin is and what you need to have in your account, and we will go, usually we want you to have 3 times the margin requirements, which you will see shortly. Okay, now auto trading, there's a lot of benefits to it. Minimizing your emotions. Automated trading systems minimize emotions throughout the trading process. Keeps you disciplined. It keeps you diversifying. It keeps you from your own mechanical failures. You know, you don't have to monitor. It does it for you. You never miss a trade. No temptation to cherry pick, which is, if I had to highlight one, it is always cherry picking, because once again, our opinions come into play, which are not good. Okay, and you know the old question: how do you ride a bear? The same way you ride a bull. It's just going in the opposite direction, because really what you're doing is you're following the trend. So I'm going to share with you our 7A portfolio today. Okay, and the 7A has got 7 securities in it, and right now you can see these are our current positions as of Saturday, and as of right now actually. Okay, but they're in different industries. Okay, a little bit double up in the gambling space, but we think it's a good space. But in the meantime, this portfolio, since its inception, this is a newer portfolio, its profit since inception is 77%. Okay, and it's about 6 months old. Now you can see right now we've got 7 stocks, 1 loser, 6 winners. Okay, but the thing I like to look at is the profit factor. Now this profit factor is ridiculous. Okay? It's way too high, but it does happen occasionally. But what you see, that most people will brag at a 2 to 1. We usually average about 8 to 1 in profit factor. Okay. So again, I didn't want to, actually, if I had looked closer, I probably wouldn't have shown you this one because I really don't want to show 274 because that's unreal. It's factual today for this particular portfolio at the moment, but it's not. So this portfolio is $107,000 based on 100 shares per trade. Okay. And here is the equity curve in this portfolio. And you can see there was drawdowns and you can see it went up and made new highs. And here you can see every result. This started 7/16. This is when this portfolio came out. You can see every weekly result that I send you. Now the results are based on 1 share. So you multiply this by 100. And the only reason was we just needed a way to keep score because I don't know where everybody's getting in on the options. So this is a way to keep score. And what I also do is I will show the option results of mine because I'm trading all these portfolios. So I have them and I have them all automated so I can easily quickly grab the results and show those as well. But this is our basic way of tracking. And of course we've got, up and down, but we just came off a new high a couple of days ago. And, as I talked about profit factor, it's the gross profits divided by loss. And it's the net you earn for every dollar invested. And typically we make 8 to 1. That's about our average. And we've got about 20 portfolios between futures and equities. Okay. And the 7A, which is what you looked at, so that's got a value of 107,000. The margin requirements are about 4,000. I want you to have 10,000 in your account to trade that portfolio. Okay. 2.5 to 3 times margin is important. Now, every day you will get an update, either if there's a trade or not a trade. You get an update every morning before most of you get up, because I start at 1:30 a.m. and I send out the updates. But you will get an update and they'll either say reverse, new trades, or no trade. But every morning you'll get an update telling you what to do, okay, if anything. Okay. Every Saturday morning you will get a full report with all of the portfolio results that will tell you exactly how we did, profit or loss. We don't hide, we tell you. And of course, win rate is important. Now people ask why? Well, because that tells us, when reading the equity curve, if we've got enough capital, how to press, how to manage it. But our win rate in history is 66%, which means that 66% of our trades are winners. And the beautiful thing is that the losers are usually, measured to X, and the winners we never know. Okay, that's always a good thing to understand. So it's always important to understand what your win rate is. And of course, you're investing in yourself, and are you ready to change your life? And that's the way I look at it. And our second part of this, which I'm obviously rushing through, and you'll have many questions. I see some now and I'll get to them. But we also offer a futures day trading product. Okay, now again, for day trading, in my opinion, options are not day tradable. Okay, because there's too much gap in too many things. If you're going to day trade, futures are the cleanest. Okay, and we have an algorithm that uses, it's just basically taking our normal algorithm down to an hourly basis. And there's many advantages to doing this, but there's also, you can trade worldwide. So if there's any Canadians here who always get trapped paying too much, that's always a problem. Okay, but we do have a deal, and we can do worldwide trading automatically. And of course, here's an auto trade sample, and this is just making a trade in one of our portfolios, SWKS. Okay, here is another risk reversal. The new trade is put on. Every time we put on a new one, it's automatically done for you. You don't have to do this. This is up to you. Okay. And then you get the risk disclosure again for Capital Trading Group, because they're the ones who are going to do the futures for you if you want to do them. And that's totally up to you. I leave everything to my members. Whatever they want is fine with me. I think it's great. And I offer the best things I can. But certainly, Here's their disclaimer, which says it's basically the same thing, except it's regarding futures. They've been in business for over 30 years. They do a great job. They're the only ones that I've authorized to do this. They're the only ones that I've authorized to do letter of direction trading. And they also trade 9 of the 10 portfolios that I have, okay? Because that's how much trust and faith I have in them to do their job, okay? Plus they answer the phone, which is always a big bonus in my book, okay? So again, we talked about what auto trading is. Okay, what are the benefits? Well, again, you don't pay data fees if you've ever traded futures before. You take all your emotions out because they're making the trades and they're telling you what you did. There's also one thing that not many talk about, which is Rule 1256 tax. Futures are taxed at a better rate. They're taxed at a 60-40 basis. If any of you trade the SPX, it's taxed like that, which is at a better rate than equities. Okay, and all clients get the exact same fill because they're done in bulk and distributed, so everybody gets the same. There is no advantage. Okay, everybody gets exactly the same fill. Okay, and of course the benefits are the 1256 tax treatment, which saves you money on taxes, and you save your money on commissions. Okay, your account, you get a statement every day, you get a 1099. You always know, and they are not allowed to touch your money. They are only allowed to execute the trades that are based, or it's called letter of direction trading. Okay, and here is our results, some hypothetical and some real money that we started this in August 19th, okay, to take it to the day trading position. And this account started with 0, okay, it's now at just over 20,000, okay, and this is 3 to 4 trades a day. Sometimes you are out every day. At the end of the day, there is no carrying positions, there's no overnights. It is trading, and your first trade will never come before 9 a.m. Eastern time, okay, and that's only if it is in gold, crude oil, currencies, or bonds. And equities, the first possible trade you can get is 10 o'clock Eastern. Why? Because these day trades are only traded during what used to be the old market pit hours, okay, because that still has the most amount of volume. So that's where we want to be, where the liquidity is. So no trade gets done until the pit hours, and every trade is exited. For example, gold is exited at 1 o'clock, crude oil is exited at 2 o'clock Eastern time. The currencies are exited at 3 o'clock Eastern time, and all equities are exited at 4 o'clock Eastern time. So there is no open trades, there is no overnight risk, there's nothing to think about, nothing to worry about, okay? And when you're trading derivatives, options are derivatives, and we're creating a synthetic stock. Futures are derivatives. They're the same. They're very much the same as options, although some will tell you there's much more risk. That is really inaccurate, because you have an exit point anyways. So it's not like you're sitting there holding it forever. But in raw nature, yeah, they have more risk, but in real life, they do not. Okay. Futures are leveraged like we're doing with the equities. You can short sell. There's no time decay. So again, when you come to day trading, whether you do it with me or not, if you're going to day trade, you really want to day trade futures because they're the cleanest markets that you can get. I'm gonna it's easy to get started. Small margin, minimum tick, no pattern day trading rule, which is another thing, right? If anybody here ever been stuck by the pattern day trading rule, the FINRA, which is really not just a secret for you. That FINRA rule is not for you to protect you, it's to protect the broker, okay? But there is no pattern day trading, tax advantage, you go in flat every night, okay? And here's a couple of members of what they've had to say. I just want to thank you for the opportunity to share your equity portfolio management program. After many years of struggle and fighting with the markets, I finally feel at peace. I have a good feeling about the system. You rock, much appreciation. And this is from an engineer, which is one of my pride and joys, because engineers are always the most challenging. I want to thank you for sharing what I consider to be the closest thing to the Holy Grail in investing. I've spent countless thousands on investment suggestions that have helped me become financially literate. But when it comes to making money on investments, luck kept entering into the equation. Profits came and went. I kept running into a brick wall until I found you. As an engineer, I've always looked for a method of investing that has mathematical and statistical certainty. Your strategy does. I cannot thank you enough, and look forward to following the markets for many years. And so the security we're trading in that I showed you, but we're trading in this particular portfolio is, I'm just popping back here, Penn, it's the SPY, the Qs, but we will trade them all. I mean, we have portfolios that are bigger that go all the way up to, 36,000 margin required. I mean, we trade Apple, we trade NVIDIA. Okay, we trade them all. Okay, they're all highly liquid. The options have to be highly liquid. That's always the key. Okay, because we want to make sure that you understand what you're getting. What trading platforms are better? Well, again, if you're trading my methods, they're all good. To me, it's about money. And Trade Your Brokerage, which is who we recommend, charges $10 a month flat. Okay, now you think about how much you trade. $10 a month flat is pretty damn good. I had a guy a couple weeks ago when I was doing this, told me he paid $12,000. I said, well, do me a favor. You could have paid $120 with Trade Your, pay the $120, give me the $11,880. I'll take it for myself. And if you want to give away that kind of money, just send it to me. Okay. I use Trade Your myself. I have other brokerage accounts. I have Thinkorswim, I have Schwab, I have Fidelity. But when it comes to being active trading, I'm using what the cheapest is, especially because that's the one broker that we can auto trade through and create all these trades automatically. Okay. And again, I go back to amateur traders want to be right. Pro traders want to make money. Okay. Traders and API. Traders are a regular platform as well. Okay. You don't need to use the API. We have their API so that we can automate it. They also have a platform here. I'll just flip it down real quick. Okay. Let me see if I can get it here. Yeah, here it is. Here. This is my personal one of my many portfolios. Okay. But this is one of their TradeHawk platform that they use. Okay. There's many different platforms that you can use with them. That's up to you. Plus their built-in free Dash platform, which works just as good. For our stuff, you don't need complex. You need simple. Okay. We're very basic. Again, I'm a simple guy. Okay. Do you use a trading journal? I do. I always do. I think that journalizing your trades, especially if you're trading on your own, you need to know what you did right and what you did wrong, because sometimes a lousy trade can be a winner and a great trade can still be a loser. But you want to understand what you're doing. It gives you a better education as well for yourself. Okay. And then, now, are you tired of making the same old mistakes, right? I'm along the same old mistakes. I mean, again, are you tired of that yet? If you aren't, then hey, have a good time. I got no problem with it. Okay. But if you want to take advantage now of something that's good, we've got what we call the day trader's dream, which is day trading futures, all executions by CTG, no overnight risk, all trades determined by a proprietary algorithm, no emotions. The first 50 people, $99 a month or $1,000 annually. Go to bubbatrading.com/dream. Okay. And if you want the portfolio models, okay, swing trading, synthetic stock, auto trading available through Trade Your, all trades determined by a proprietary algorithm, no emotions. First 50 people here, $99 or $1,000 a year. bubbatrading.com/stocks. Okay. These are the two programs that are good until tomorrow. Okay, 12, 15, and 16 at these prices. And we've got plenty of members. We've got a chat room. We've got the ability to, communicate. I am the customer service department. Okay, I'm everything. Okay, I've got a staff, but I do everything personally myself because I believe that people want to talk to me if they have a problem. Okay. Do you use it training? I got that. Okay. So I think I got all the questions, and I know that I'm a couple minutes early because I listened to time for questions, and I probably ran a little bit too fast, but it's always hard for me to gauge because I'm used to talking for a long time because there are usually many questions that come up. But in the meantime, if you have questions about any form of trading, it doesn't have to be mine. I'll answer anything you want. Okay. And, we're here to always help you. I just came back, which is why my voice is cracking. I just spent 3 days in Vegas with my members talking for 3 full days. Okay. And I did 6 interviews yesterday. So,
Wow.
And I'm doing a radio show later. Yes, sir.
That's a lot. I was thinking that it was an awful lot.
It's an awful lot, especially when you have a trader's voice, which, from all those years of yelling and screaming on the floor, it became somewhat of a problem. I lose my voice faster than most. So,
oh boy,
that's good. I'm happy. And look, again, anyways, I'm happy to answer any questions. If you have them, feel free. Again, it doesn't have to be, it could be about trading. It could be about anything you want. I'm not again, I'm happy to help you. And you can email me as well. If you ever have any questions after this, you can email me at bubba@bubbatrading.com. Okay. Again, I'm going to help you no matter what. I don't have an agenda to sell everybody. I know that some people want to be part of it, some people don't. And the truth is, I only want happy members. I don't want to deal. The reason I don't have a full team, I don't want to have to deal with people that are unhappy. I want happy people, and that's what I create. I create happy people because we do a good job, we're honest, and we tell you the results. I mean, I can't do any better than that, and I'm not afraid to tell you when we're going through a drawdown. It happens all the time. I can't hide.
It makes good sense.
So
Stephanie was very prolific today. She had a few other questions. Did you get to them?
I think I got them. I thought I got them all.
The trading journal. Did you talk about a trading journal at all?
I did, but I can mention it again if you want to hear the answer. I mean,
okay. No, that's okay.
It's important.
Yeah.
In fact, I gave away journals to my members at the show in Vegas. Okay.
Ooh.
Because I live there. I live in Vegas part-time too. I'm half in Chicago, half in Las Vegas. So.
And then you had a link that I should probably throw up there at this point.
I've got actually two. One for the day trading. It's bubbatrading.com/dream. All
right.
And for the equity portfolios, it's bubbatrading.com/stocks.
All right.
And those prices are good till tomorrow night. And certainly feel free to email me anytime you want. Again, general questions are okay too. They don't have to be necessarily to me. You will also, anybody who joins today will also get to trade with me live in the morning futures for 1 month at no cost. Okay, you can come out and test it out and see how I do it and what I'm teaching. That's something that I'm offering for today for the people that are here. But you can come with me for a month and trade every morning. I trade from 9:45 Eastern till about 10:30 or so, depending on how it's going. And I will warn you all that in about 15 minutes or so, 20 minutes, I know you'll be on the webinars, but if you happen to have a screen up, it could be kind of wild because Jerome Powell is going to do something and the market's telling me that he's going to do something more drastic than anybody's expecting. So we'll see how it plays out.
Oh boy. All right. Wow. That was awesome. I really appreciate you being with us, and I'm putting out my schedule for next year. I hope you'll come back and do it again sometime.
I will always come. You guys are great. I'll always come back. You guys put on a great show and have great presenters. And make sure you listen to the next presenters because they all got good ideas. And really, life is about accumulating good ideas from all the people that you can and figure out what works best for you. So I'm all good. And see, I got you. I kept you on schedule because I'm fast.
You are fast. You are totally fast.
Too fast. I lost my train of thought, but it's okay because hey, I got to be a good boy. I don't want you to be mad at me. I want to be invited back. So I thank you very much, Sherry. Have a great holiday. Happy Hanukkah, Merry Christmas, and Happy New Year to all of you. Thank you so much for listening, and I appreciate it. And again, you can email me at bubbatrading.com if you have any questions. And until we meet again, Sherry, thank you so much.
Thank you. You have a wonderful day and a wonderful holiday.
Thank you.
Hope you get to take some time off.
I don't take time off. I love working.
All right. Well, I'll let you head on out then. I know you got a lot to do, and I appreciate it very much. Thank you.
Thank you, Sherry. Have a great day.
You too. All right, folks. Next, wasn't that great? Let me see. Can you see my screen? Everybody see my screen now? And we are going to come in now. I just want to remind you that we do archive these webinars. You can find them at tradersexclusive.com/archive webinars. And we also post other great information there. So our second speaker is waiting in the wings, Mark Helweg of the Trader Institute with the explosive traffic pattern for trading options. Mark began his trading career as a runner on the floor of the Chicago Board of Trade at the age of 19 while in engineering school. When he turned 21, he leased a seat on the floor and traded in the Treasury bond futures pit for a brief time. And after leaving the exchange to focus on his engineering training, Mr. Helweg pioneered early quantitative trading models for a local hedge fund. I said that slow because that is a mouthful. Over the past 20 years, Mark has served as head of research and senior strategy developer for several award-winning hedge funds. He's also authored his first book, Dynamic Trading Indicators, with the John Wiley and Sons Marketplace series. This book was recognized among the best investment books of 2002 by Barron's magazine. And he's also been a frequent contributor for CNN Money pre-market and also speaks internationally on technical analyses in the stock, futures, and Forex markets. And of course, he visits us at Traders Exclusive from time to time, which we really love. Are you there, Mark?
Hey, Sherry. Yes. Can you hear me?
Hey, I can hear you. So, question for you.
Okay.
Do you like to have questions on the fly, or would you prefer to hold them to the end?
Actually, if we can hold them to the end just to make sure we can get through the content, that'd be great.
All right, I'm going to make you a panelist now, or organizer, or a presenter. That's what I'm trying to say. One of these days I'll get it right. I'll make you the presenter. Yes. And then you should be able to share your screen.
Okay.
And
great.
I see the explosive traffic pattern for trading options. Take it away. Thanks for being with us.
Thank you so much, Sherry. Appreciate that. Hello, everyone, and thanks for having me today with Traders Exclusive. I'm going to march through this because I want to make sure we respect our time here. So let me go ahead and dive right in. This is about the explosive traffic pattern for trading options. Now, my background, as Sherry touched upon, is primarily senior strategy developer in the hedge fund space for about 20 years. I've been blessed to be a part of some award-winning hedge funds and have focused primarily over my career on technical analysis using charts to create indicators to forecast price moves and also to create trading algorithms to automate and generate trading signals, if you will. Let me quickly touch on some standard risk disclaimers. Trading involves a high level of risk and is therefore not suitable for all traders. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. My general advice, never trade with money that you can't afford to risk. All right. Secondly, hypothetical risk disclaimer simply says that hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. And in today's presentation, I'm going to show you one of two things: either actual published trade alerts before the fact, we didn't know how they turn out. I'll show you those, and then I'll show you a number of real trades as well. Now, let me give you the background. I've got to go back in time a little bit to set the stage here. Back in 2017, we launched a new options trade alert program. The program was designed to beat the markets through probabilities using a number of different strategies. So each week we would broadcast 50 to 70 trade or option trade picks or trade alerts, and we tracked our performance and crunched the numbers at our first 24-month marker, and we had some pretty good results. So let me cover those. We had a total of 1,027 trade alerts that made over 100%. We had 365 trades that made over 200%. We had a total of 2,383 winning trades, and if you added up all the winning trades and all the losing trades together, we were up 84,994%. Now, it's important to understand that when we calculated these results, we were using what's called optimal exit because we had three different exit possibilities. We had two profit targets, and we had an end of trade, like hard stop closing exit as well. If the second profit target, for example, was up 300% and the end of trade exit was up 320%, we would take the end of trade exit to represent, if you will, the optimal exit. That's how we calculated this performance results, just to make sure you understand. This is a graph, assuming you risk 1% per trade. This is what it looked like over time. So we were not up every week, and I think we even had a few down months as well, but overall it was pretty good. So we had a lot of explosive up months, a lot of explosive up moves over time, pretty consistent results and not too terribly bad. Now, although we're excited about our results over the first 24 months, we had a really big problem with this trade alert service, and that is most retail traders cannot trade 50 to 70 trade picks a week. So it was overwhelming for most small normal traders. And so we had a lot of people come to us and say, look, just tell me the best three. And it's kind of a funny question when you think about it, because that's really what we all want to know. What are the best trades out there? But at the same time, it was actually a pretty good question. Our subscribers, the retail traders who were in the service, they wanted us to take a look and said, is there any way you can look at perhaps some of your best trades to find something that they have in common. And so we decided to roll up our sleeves and crunch or analyze the biggest winning trades to see if there was something that a lot of them had in common. And the real breakthrough came when we noticed some similarities among many of our biggest winning trades. We found that when three market conditions appeared, the stock would often experience a big price move. The three market conditions were like hidden clues that the stock was about to either take off to the upside or drop like a rock. For example, in late 2017, when the SPDR DIA ETF experienced all three bullish conditions, it ended up taking off like a rock. And the way we represent this in the chart is each condition has a light, for example. So if each condition flashes green at the same time, that's all three of them saying that the stock's likely to go higher, that gave us an official signal. So in this case, this was a trade alert that we had. We published it. We told our followers to buy the DIA 235 calls, and those jumped in value by 338%. And to give you an idea what that is, some people have a hard time thinking, what is that in dollars and cents? So I'll give you a small account reference and a larger account reference. So $200 worth of these 235 calls would have grown to $876. That's what 338% means, the jump there. Or if you put $1,000 with a larger account in this trade, that would have grown to $4,380. Then in March of 2018, when Wells Fargo experienced the three bearish market conditions, WFC dropped like a rock. So the conditions can either be bullish or bearish. When all three of them are bearish and fire off at the same time, they each create a light, if you will, or a dot on the chart. We have shown here just for that to show you how it works essentially. And then in this particular case, we recommended buying the put options. Now, if you're new to trading options, you buy call options when you expect prices to go higher. You buy put options when you expect prices or you want to profit from falling prices. So in this case, the three red conditions, each condition was bearish. We got three red lights. And so we published a trade alert that was buying the WFC 56 puts. Those jumped in value by 515%. So $250 worth of these puts would grow to $1,540, or $1,000 turned into $6,150. The three market conditions were like three distinct patterns, which we developed into the three light pattern, or what we call the traffic pattern. When the three market conditions triggered at the same time, the stock often experienced a big price move. So in this particular case, if you look at like JP Morgan Chase experienced a bullish traffic pattern. Remember, each condition is then flashing green. So you get the three green lights all at the same time. We recommended buying the JPM 98.5 calls. Those jumped in value by 568%. So the traders who took that, if you had a small account, you bought $200 of that, that grows to $1,336, excuse me, or $1,000 if you have a larger account, grows to $6,680. Or when Citigroup experienced a bearish traffic pattern, all three of these red or conditions turned red or flashed red. We forecasted that Citigroup was likely to go down. We recommended buying the 73.5 puts. Those jumped in value by 400%. So you get the idea. Small account, $250 would have grown to $1,250, or a larger trade of $1,000 would have grown $5,000 in this trade. Or when UPS experienced a bearish traffic pattern, in this example, we had all three red lights flashing, and we recommended buying the UPS 111 puts. Those jumped in value by 413%. So $250 grows to $1,282, or $1,000 grows to $5,130 in that trade. When the traffic pattern appeared, stocks often had big moves, and options in turn would jump in value, because options can make big profits when stocks experience big moves. So buying call and put options is really the perfect way to cash in when stocks are likely to experience big price moves, either in the up direction or the down direction. We named this new strategy with the three conditions the traffic pattern option strategy, or the three light strategy. Trading system flashes green or red to signal when a stock should go up or down. Now, the traffic pattern not only forecasts direction, but also predicts when a big move is likely to happen. And this is what makes it unique, because most technical chart patterns are forecasting direction. They're not necessarily forecasting an explosive move. if you will, in that direction. That's what we found interesting when we were researching this. And we noticed a lot of our biggest winners had this pattern in common. And so it's not only a directional prediction, if you will, either in the up or down direction, when we had all three conditions firing bullish or bearish, it was also that potential explosiveness in that direction that made this a special pattern. And big moves are what make options really explode in value. So let me tell you a story about multiple conditions. This is a funny story, true story, by the way, that I call What I Learned from a Genius Convicted Felon. Actually, again, true story. When you trade long enough, you're going to run across very strange stories over time. So this is a story from a friend of my father's who's my senior by about 30 years. And he became my friend as well back in the 90s when I was in college. And he was telling me the story about early in his career. So we both love trading and we've talked trading strategies quite a bit. So in the early 1980s, this good friend of mine, who was my father's friend again, was telling me that he responded to an intriguing ad in the back of a trading magazine about a highly secret trading strategy. So remember, back in the 1980s, there was no internet. You had to learn about trading strategies and trading in general through magazines and books and things like that. So he was intrigued by this ad, and this man who was a friend of mine convinced his top client to spend $25,000 to buy this trading strategy. And to me, that's the crazy part of the story. I mean, if you can imagine finding an ad in the back of a magazine and then actually spending $25,000 sight unseen, you know, you can't research the background or anything. And he did that. So they called this gentleman up. They wired $25,000, and then they traveled to Dallas, Texas, to meet the creator of this special trading strategy. And this is where the story gets really strange. So they're traveling essentially to pick up like a manual, a book that was written to document the strategy. They get off the plane, they rent a car in Dallas, they drive to the address that was given to them, and they end up in a very normal middle-class neighborhood. And I think that was the first thing that was a red flag to him. He's thinking, you know, I just spent $25,000 here, my client did, and they were expecting to be in the nicest part of town after that, because that's a lot of money back in the early 80s. You could buy a really nice Mercedes or BMW back then. I mean, still a lot of money today, but it was a lot of money back then. So they drive up to the house, the address that was given to them. They walk up to the front door, knock on the door, and this mad scientist looking guy in a sweater with unkept hair answers the door. And the first thing he says is, do you guys mind meeting me in the garage? So even after they spent $25, he wouldn't invite them in, you know, to meet in the living room or something. He'd ask them to meet him in the garage. So they walked around outside, the garage door opens, and he enters the garage. And the first thing he says inside the garage is, I just got out of prison. So you can imagine my friend is just beyond himself at this point. He's saying, what in the world have I got my best client in? He's never going to talk to me again. But here's where it gets interesting. This man was not a violent felon. He was in prison because he built complex listening devices to help the Hunt brothers corner the silver market. So while he was in prison, instead of wasting time, he decided to research the charting greats like Fibonacci, Gann, and Elliott. And what he discovered during his slow days in prison was pretty remarkable. So very, very bright man, scientist, and he made an interesting discovery during his research. So this highly intelligent man observed that certain chart patterns have predictive value. Now we know that today, right? Like head and shoulders or pennant patterns and things like that, triple tops or double tops. But what was interesting is that when he had multiple patterns that were all saying the same thing at the same time, the results often were superior, and both in terms of possible increase in reliability, but also that explosive factor. So I found that really interesting. And you can imagine me as a college student picking up a $25,000 trading strategy manual. I was looking through this thing, really intrigued, obviously, that I came from a normal middle-class family. So that was way beyond anything we could have ever spent or I could have spent on it. But I was holding this manual in my hand and really intrigued by the idea, well, if you have multiple patterns, all firing off different patterns at the same time, how that had the potential to actually increase your explosiveness and probability. The accuracy of these multi-pattern predictions, these incredible forecasts increased dramatically. And I would say even more so the explosiveness was a very interesting part of that. So today, the traffic pattern follows these same principles that this man uncovered. Now, with our strategy, we're leveraging multiple conditions that signal when a stock is likely to take off or drop like a rock. For example, when 3 bullish traffic conditions appeared for Ford, the stock ended up taking off. You can see the 3 green lights in this case, 3 green lights, all at the same time. We published the buy alert buying the Ford 12 calls, and those jumped in value by 177%. So $100 turned into 277, or $1,000 turned into 2,770. Or when the three bearish traffic conditions lined up for the SPY, the ETF sold off hard. So this is the three red dots. We published a trade alert to buy it, the SPY 274 puts. Those jumped in value by 488%. So $250 grows to $1,470, or $1,000 grows to $5,880. And when the three bearish traffic conditions lined up for 3M, the stock ended up plunging. You can see here the three red dots for 3M. We published an alert to buy the 237.5 puts. Those jumped in value by 532%. So $250 for a small account reference grows to $1,580, or $1,000 worth of these options grows to $6,320. So I think the next question is, if I'm listening to this presentation, I'm asking, well, what are these three patterns? I'm going to show you exactly what they are. So if you want to use these in your trading, if you want to mimic what we did with our trade alert service, let me show you what these patterns are so you can trade them as well if you want to. So the three patterns that we observed before many of our biggest winners work together to make up the traffic pattern. Now, the other thing I'll mention is, for those of you saying, can you show us recent examples or recent trades? Yes. So I'll show you here in a bit the trades that we have on. So we have the ones we have recommended, and I'll show you also our track record. We just passed our 12-month anniversary of this as well. I'll show you that as well, just so you can see what's happened recently. So here's condition number one. We call this surging momentum. Now we're looking for stocks that have a significant increase in upside or downside momentum. Surging momentum must be present in a stock as the first condition for the traffic pattern strategy. Now, a real breakthrough came when we discovered what we call predictive momentum patterns. We discovered through empirical research that initial momentum surges were often very difficult to predict, at times approximately 15 to 20% accuracy, which is not very good. Therefore, we don't try to predict what we'll call initial momentum surges. Then we discovered that continuation momentum surges could be predicted with much greater accuracy, 70+% of the time potential there for these. Therefore, the traffic pattern ignores initial momentum and only focuses on what we'll call continuation momentum. So here's an example of that. If you look at the top of my chart here, you have the stock chart, right? And then in the green box here, you'll see the momentum patterns, but down in the bottom here is the momentum indicator. It either has red histogram bars or has green histogram bars. So you'll notice here that we have this initial surge in the green bars here. That's initial momentum. We don't try to predict that because that's difficult to predict, but you'll notice that it has almost like a cyclical pattern in the momentum indicator. And the secondary move, labeled by the green arrow here, that's what we call continuation momentum surge. And that's what we have honed in on as being a significant pattern. So when we see that continuation momentum surge, this lights up the first green light, if you will, in the traffic pattern. So that's condition number one, what we call surging continuation momentum. Now, condition number two is really just a very normal cycle swing. Then we look for a well-defined cycle swing in the direction of the surging momentum. We found that surging momentum oftentimes supercharges cycle swings. The cycle swings define the price action that traffic patterns trade. Cycle swings must be present as the second condition for the traffic pattern strategy. So now you'll see in the bottom of my chart here, I have a normal cycle indicator. Really nothing too terribly special about this. It maps out, if you will, it tracks the market cycles for the stock fairly well. You can visibly see the upswings and the downswings occurring in the cycle indicator. And here, labeled by the green arrow, we are basically seeing the cycle swing during the same time frame as the continuation momentum surge. Now, the thing to remember here about the swing, this defines when we want to be in the market. So we want to be buying the call option because we expect prices to go higher as close to the cycle low. We want to get out or exit the trade as close to the cycle peak. So the cycle upswing for bullish trades is really what we want to use to define the time period that we want the trade to be in the market. So when we have an upswing like this lights up our second green light. So this is our second condition number two, a bullish cycle swing. Condition number 3 is what we call peaks and troughs trigger. The third condition is really more of a trigger, which enables us to get into swings when they first start, potentially. This trigger is designed to detect the beginning of a swing at the cycle low for buy signals or for call option trades or bullish conditions, or cycle highs for bearish trades. So in this case, this is a custom, we'll call peaks and troughs trigger. This is a troughs version here, where we're trying to detect the likely reversal of the cycle low. So when is the cycle low in place? This is designed to tell us that. We have a number of these indicators that we call kind of like peaks and troughs triggers, but this one gives you an idea when this triggers, this actually lights up the bottom green light. So when all three of these together, this is condition number 3, when all three of these, let me put that back up there, I know I knocked out there. When all three of these actually happen at the same time, then we get a confirmed bullish signal. So all three conditions line up, then we get the traffic pattern trading signal. So here's what it looks like when all three of these indicators are on the same chart. You'll notice the first one, we have initial momentum, and then we have continuation momentum, the second upsurge there, momentum, and then we have the well-defined upswing indicator 2, and then we have the troughs trigger down here, essentially where the blue arrow is up here. So all three of these trigger, they create 3 green dots or lights, if you will, in the chart, and this confirms a bullish traffic pattern. Now, when all three bullish conditions line up, we look to buy call options. If you're new to trading options, you buy a call option again when you expect prices to go higher. As I've said before, I've shown you some bearish examples. These patterns, these conditions can also be bearish as well. So bearish traffic patterns forecast when the stock now is likely to drop like a rock. For bearish traffic patterns, we look for negative surging momentum. So, here's what it looks like on condition number 1 in the bearish sense. So you'll notice here on the left side of my chart, we have this really big down move in the momentum indicator. We don't try to predict that. That's initial momentum, too hard to predict. Over on the right-hand side, you'll notice we have a down surge, and then we have like a little resting period, and then a following continuation surge. That's what we're after. So that lights up the continuation surge. The second down surge lights up the first red light, and this gives us condition number 1 for buying put options. Then we look for a negative cycle swing, just the opposite of before. So we're looking to trade the downswing of the down cycle here. That's defining the lifespan of the trade we want to be in. We want to buy the put option as close to the cycle peak, and we want to get out of it as close to the cycle low. We do not want to get in early. We don't want to be in the put option during the previous upswing, and we don't want to overstay our welcome and be in the trade during the following upswing. We just really want to be in the trade as much as possible during the cycle downswing. And then third, we're looking now for a top trigger because this is bearish. So the opposite of before, because this is bearish, we're now looking for a confirmed cycle peak. And this indicator at the bottom helps us find that. So that lights up the bottom red light. And then if you look at all three of these together, we get a confirmed bearish traffic pattern alert. So here's what the indicators look like all in the same time. On the chart, you have the initial down surging momentum and then continuation momentum. You have the down cycle for condition number 2, and then condition number 3 is the peaks trigger. So when all three of these trigger, you get 3 red lights, if you will, at the same time on the chart. And that's when we look to buy put options. So with bearish traffic patterns, we're buying put options. Why? Because put options allow us to potentially profit from falling prices. So when traffic patterns signals occur, they seek to forecast not only direction, but also seek to forecast big moves in stocks. So when Capital One Financial had all three bullish conditions, a bullish traffic pattern signal was generated. This is pretty much textbook. So if you ask me, what is the perfect kind of textbook version of what this could look like? This is it right here. You have a very well-defined initial momentum surge, then you have the continuation that lights up the top green light. Beautiful cycle defined here by the cycle. There's your upswing, that's the middle green light. And then you have the troughs trigger where the blue arrow is, that's the bottom green light. This is a real trade alert that we published. Traders who traded this, we recommended buying the COF 87.5 calls. Traders who traded this, made this trade made 480%. And what that looks like, again, small account, $100 worth of these would have grown to $580, or $1,000 of these would have grown to $5,800. When IBM had all three bullish conditions, a bullish traffic pattern signal was confirmed, and IBM options increased in value. So here's what it looks like. This is an example I wanted to include because this one does not, it kind of fizzles out a little bit. The first initial surge right here was pretty strong. The follow-on surge was pretty anemic, not really strong, but it did meet the condition. It lit up the top green light. We had the second upswing here, middle green light turned on, and then the bottom Troughs triggered. All three green lights were met. This is a confirmed traffic pattern, but it only made 111% versus some of those larger winning trades. Now, here's the interesting part of this chart. If you look over to the right of this, there's actually a second traffic pattern trade. Notice another continuation momentum surge, another upswing, another Troughs trigger. So this would have been likely a couple 100% winner, but we missed out on that. We didn't see it. And these can happen sometimes, several in a row like this. So that's something to look for with traffic pattern trades. And when Norfolk Southern had all three bullish conditions, we knew it was likely to take off. This is another textbook one. You have all three green lights. We recommended buying the NSC 130 calls. Traders who took this made 572%. So $250 turns into $1,680, or 1,000 turns into 6,720. Now, we also know that traffic patterns can also be bearish. And when they trigger red, they forecast when stocks are likely to drop. Like when Aetna had all three bearish conditions confirmed, we knew it was likely to sell off. Here's an example of this trade alert. We had the continuation downside momentum, condition number 1, lights up the top red light. We had the downswing in the cycle, condition number 2, lights up the middle red light, and then we had the peaks trigger, where the blue arrow is condition number 3. So we recommended buying the AET 175 puts. Those jumped in value by 202%. So you get the idea. 250 grows into 755, or 1,000 grows into $3,020. And when Tata Motor had all three bearish conditions, we were confident it was about to sell off. This is one that kind of fizzles out. Not all the winners are going to be these big home runs. Sometimes it's just very small winners. Sometimes they're medium size. Like this one's like a medium size to me. And then sometimes you get those really big winners as well. So this is an example of I'll say a kind of a one that's kind of fizzles out a little bit. Still winning trade. We're not going to complain. Made 120%, but you'll see continuation momentum was a little bit anemic. All three conditions, bearish conditions, were met. This was a confirmed signal. We recommended our option traders to buy the TTM 26.5 puts. Those jumped in value again by 120%. So 250 grows to 550, you get the idea. $1,000 for a larger account would have grown to 2,200. And then Norfolk Southern had all three bearish conditions confirmed. So we forecasted it would drop in value. Now here's one I wanted to include because the timing is off a little bit here. You'll see that it fired off a little bit early. We had all three bearish conditions, but Norfolk Southern actually ended up going up a little bit before it went down. And that's going to dilute your profit potential a little bit in this case. So this ended up being up 115%. Our trade was recommending buying the NSC 130 puts, but we lost a little bit of that profit potential because the timing's up, and the timing can be off in these trades. So again, 250 grows to 537, or $1,000 grows to 2150. So let's talk about the essential part of this. And I will get to questions, so thanks for your patience on this. I just want to make sure we're just limited on time today, that I'm able to get through the content. So if big moves in stocks can make big money trading options, here's what I love about buying options. Let me give you the quick rundown. If you look at like a right-wrong meter, just envision this in your mind. Let's say we're expecting the stock to go up, but we're a little bit wrong. Or let's say second scenario is we're medium wrong, or let's say we just couldn't be more wrong. We're just on the dead wrong side of that. In this particular case, the great thing is we cannot lose more than the cost of the option, whether it's a call or put. If we buy $100 worth of options, our worst case scenario is we lose $100. But on the other side, if we're right a little bit, or right a medium amount of we'll call it on the trade, or we hit it out of the park, our upside potential is much, much greater. So even though we're risking $100, when we buy calls and buy puts, we have the potential to make $200 or $300 or $500 or even $1,000. So it's much, much greater. You're not necessarily guaranteed to lose $100. When you're wrong, you may lose 25 bucks, or you may lose 50 bucks. We try to kick out of wrong signals as quickly as we can, but worst case scenario, if the sky falls, you cannot lose more than the cost of your option. I'm going to show you a real trade I put on a little while back, and I'll show you how it was dead wrong, and I only lost what I put on the trade, which is great. So also, if our risk is always also limited, the price we paid for the option, what I just talked about, then it's possible traffic pattern may be one of the best ways to swing trade. I think it is. In fact, this breakthrough strategy could be one of the best ways to trade options that I've ever seen. That's a big statement. Why would I say that? Well, simple, because when you're buying options, you always want to trade on the same side as the cycle swing. And in this particular case, we found some conditions that have the potential to supercharge the swing. And the best part of the traffic pattern is it's incredibly simple to trade. Now, what really convinced my team, and I've got a couple of researchers who work with me, the power of this was a series of real option trades that I put on. So these, ironically, in this case, I'll tell you about the worst trade in the group. This was not a traffic trade, as ironic as this is, but all the other best trades were. This is a very, I'll call it a nice, great period for trading traffic patterns. So this is the results from that short period of time. This is not normal. It's very unusual to have this many big winning traffic trades at the same time. But here are the results from a very good week of what I call real traffic pattern options. So each trade was risking $1,000 in this example. Let me first touch on the losing trade. So I bought, in this case, the Oracle 52.5 calls. This was not a traffic pattern trade. In this case, Oracle had a earnings report come out. They missed badly. Oracle had the biggest down week in history. Think about the right-wrong meter there. I could not have been more wrong about the direction of Oracle, but guess what? I could not lose more than my $1,000 of risk. I'm risking approximately $1,000 per trade. So I lose $1,000, but when you think about it, how wrong I was in that trade, I should have been punished far worse. That's how most things in life work. When you're catastrophically wrong, usually your life will punish you a lot worse, but when you buy options, it doesn't. So that's my locked-in loss. Could not lose more than $1,000. Now, when you go over to some of the winning trades, first winning trade was UVXY. I bought the 15 calls. This was a traffic trade. So this ended up making $3,024. So after I subtract that loss with my first traffic trade, I'm still in the plus column by $2,024. And this is one thing I love about buying options. The upside potential is much greater than my worst case scenario downside loss. First trade, I pay for all my losing trades, and now I'm in a plus column. Second trade, the UPS, this was a trade buying the 110 puts. This made $3,852. All of these trades risking approximately $1,000. So that was a really nice gain there. Next trade was in UNH. That was buying the 225 puts. That made $4,555. Now, the cool thing about this strategy, this is not over months. We're not talking about making 400% in 6 months. This is like days. These things are explosive and they happen very quickly. AT&T was another traffic trade. That was buying the 37 puts, made $1,885. The SPY was buying the 273 puts. That made $4,592. Now here's a traffic trade that made $84, and to this day it still fires me up. This was one that should have been a couple $1,000 winner, but the liquidity was so bad with SDS options that getting in and getting out just totally robbed, if you will, the profit potential. So I do not trade SDS anymore. That was a winning trade. I got it right, but I should have known better. Liquidity was horrible and only ended up making $84. So I don't trade SDS anymore until they can prove that they can provide much better liquidity. Procter & Gamble made $3,024. Navistar made $1,240. MasterCard made $2,960. Johnson & Johnson made $2,730. Home Depot, you get the idea, made $2,250. And then Goldman Sachs up $4,444. There's even more than that. Apple made $3,588. AET made $540. So this is just listing kind of some of the first winners. But this was a very unusual, can happen. Sometimes it just really rains these great signals all at the same time, but this is unusual. This is not normal to see this many explosive traffic trades right next to each other. Usually they kind of feed out over time. To give you an idea how explosive that week was, $2,000 in each trade would have made about $90,000 in a week. So after trading real money, I really began to understand the power of the traffic pattern strategy. Now understand, there was a losing trade there in Oracle. This was not a traffic signal, but this drives home the point that you can lose and you will lose. Now it's important to understand there will be losing traffic trades, guys. Understand that like any strategy in the world, no strategy wins all the time. Successful trading, any professional trader will tell you, is about making more money from your winners than you lose from your losers. So when we see a losing or a broken traffic pattern, we try to get out, with the smallest loss possible. I'll show you some of the recent trades that we have out there. But it's okay, if you have a 99 or 100% loser, when you have upside potential of 196% or 434%. That's what our strategy is. Limit the losers and go for the big winners. So let me hit some questions here and just touch upon, for those of you asking, how do I get the traffic pattern signal? So there's two ways to do it. Number one, if you're a do-it-yourselfer like me, I've shown you what to do. So you want momentum, continuation momentum, you want the cycle in your favor, and you want to create a peaks and troughs trigger. Now ours is internal, but you can use 1, 2, or 3 bar candlestick reversal patterns. They can be very effective as well. So you can monitor, just like us, a list of about 150 optional stocks every day. Put the time in, it takes a couple hours, and then track for these traffic pattern conditions. So I encourage you to do that. I like to do that. I'm a big nerd when it comes to markets, so I don't mind sitting in front of my screen. I enjoy that. So if you're like me, you enjoy doing the work yourself, I've shown you everything that you need to do this. Now, if you're the second person who says, Mark, I don't want to sit in front of my computer every day, can you just tell me when you guys find traffic trades? The answer is yes. You can let our hedge fund research team, using our trading tools, find traffic pattern trades for you. Our professional trading desk team monitors 150 traffic pattern or stocks that we've handpicked every day, so you don't have to. We expect to find about 5 to 10 traffic pattern trade alerts each month, and we send them right to your email inbox in real time when we find them. There is no gray area. We tell you the exact symbol, the exact strike price, and the exact expiration date of every single trade alert that we publish. You're not left guessing at all. Now, it's simple enough for my 8th grade daughter to trade our service. We give you everything you need to trade it. And best of all, we're going to target traffic pattern trades like this one. This is a real trade that we published, and this is when all 3 bullish lights turned green and confirmed a bullish traffic pattern. We recommended buying the COF 87.5 calls. Those jumped by 480%. So you get the idea. We also find bearish ones over time. So people ask, Mark, what happens when the stock market rolls over and we see a bear market? It's inevitable at some point. Well, we find bearish traffic patterns when that happens. And this is an example of one that we published where we said buy the SPY 274 puts, and this trade alert was able to make 488% from falling prices. So 250 grows into 1470, or $1,000 grows into $5,880. Now, that's not all. If you want to follow our service, we want you to master the traffic pattern strategy. So you'll get my new special report called the Traffic Pattern Exposed. In the Traffic Pattern Exposed, I'll walk you through the trading strategy, soup to nuts, everything you see here, along with clear examples will be available for you to follow. So specifically in the report, I end up going through all 3 conditions. Condition number 1, continuation momentum. Condition number 2, a cycle swing. Condition 3, peaks and troughs triggers. I give you, this is called a confluence. I give you lots of examples, call option examples, put option examples as well. Now, if you're new to trading options, no problem. I've created a quick start video library to introduce you to the basics of trading options. I cover all of these points: how to buy, for example, a call option, how to buy a put option, how to open up an account, request certain levels of clearance, what is the option chain, I explain that, some of the basic Greeks, what is delta, what is gamma, how to close out your option trade, what software you can use, underlying charts and how they relate to options. I also created an option position sizing calculator, all this designed to find those really explosive traffic pattern signals. Here's the option position sizing calculator. Simply type in your account size and how much you want to risk per trade, and then type in the trade alerts you get over time. This will automatically calculate and show you your maximum risk for each trade if you prefer not to do that manually. This is something that makes it really easy for you to do. Now, here's our trade alert service. We created what we call the ultimate traffic pattern alerts. And essentially we scan 150 hand-picked optional stocks looking for the patterns. When we find them, we send alerts right to your email box, right to your smartphone. We include everything you need: symbol, strike price, expiration date. There is no gray area. There is no guessing. Every single alert, you get the entry alert, stock price reference, you get a profit target, and you get, if we're winning trades, if they start going in your direction, you have a second way to exit trades, and that's using the trailing stop. So if you want to let a winner run, you can use the trading stop level. Check the board every day, I'd say twice a day, if you have a big winning trade, because the stop level is dynamic. It continues to update, continues to lock in more and more profits. This service is managed by my professional hedge fund research team, guys. So this is an actual professional hedge fund research team that's doing this. And we also have professional customer support. If you ever have any questions, here are the trades that are on now. So here's a number of them. We just had, looks like Macy's hit the profit target. JD also hit the profit target. And a couple of these other trades are still on right now. We just passed our 1-year anniversary. So here's the, I just took a Photoshop, a snapshot of this. So right now, we use the optimal exit. So what does that mean? Like for example, right here, VALE, the profit target, the option costs $44. Profit target was out at $60, and the trailing stop looks like it was out at 95. So this is a trade where we take the optimal exit. So in this case, the trailing stop was more profitable. So that's what we record in our track record. That's how that works. But if you look at all the trades for the last 12 plus months, we just had our 12-month anniversary. The service right now is up 4,681%. Here's some recent ones. So Uber trade buying the 39 puts up 89%. ASAN was a big winner, buying the 105 puts was up 283%. Facebook, a recent winner, was up 169%. 3M was up 80%. A couple examples. You will have losing trades. Here's Snap. This is a losing trade. You lost 33%. So what does that mean? If you bought this trade for $200, you lost about $60. So 33% of the price of the option. Sometimes you lose the whole thing. We try not to do that, but sometimes it happens. So in this case, it's a $148 option, and GPS had an unexpected announcement and went against us. So this is the worst case scenario, but then you can easily make up for it in trades like this. This is Johnson & Johnson buying the 160 puts, made 126%. So you get the idea. So this is the promo, guys. Normally the 6-month traffic pattern alerts goes for $9.97. Normally the traffic pattern exposed special report goes for $9.97, and normally the on-demand videos library is $6.50, and the option position sizing calculator is normally $100. All this together is normally $27.44. Guys, we've slashed it down to $4.97. So you just want to go to the following link here, www.toptradetools.com/go. So let me go ahead and type this into the chat box, or Sherry, if you can do that. Let me see if I can do that here. Yeah, I think Sherry, if you can do that, I don't know if you've got the ability to do that. That'd be great.
I will absolutely do that.
Okay, so this is it. Let me touch on one quick point. I know I'm running out of time. So you want to go to this call site, 859-963-3445. There is a guarantee. So let me show you quickly this. We just run out of time here. I've shown you 14 trades that each could have paid for this thing, not only for 6 months, for a year. Each one of these real trades, just in this 1 week period, made over $1,000. So some of them made over $2,000 or $3,000 as well. And this is managed by our hedge fund scanners and market analysis tools. We have one of the few alert services managed by a professional hedge fund research team. It's almost like having your personal research team find the trades for you. But I just wanted to touch on, here's the 3,000% guarantee. If we cannot show you over the next 6 months 3,000%, that's only the winning trades, not the losing trades. The losing trades will take this down a little bit. But if we can show you over 3,000% of winning trades, then, we cannot do that, then you get another 6 months for free. That's my team and I working for free for an additional 6 months. If we cannot show you over the next 6 months 3,000% of winning traffic trades. So we're very confident to find trades like this one, DIA, 235 calls up 338%. So this is it. Sherry, thank you so much for having me here. I know it's kind of quick. Any questions?
I really appreciate it. And let's see, do we have questions? Let's just look over here.
See, I don't have a question box on my screen, so I can't.
No, I didn't make you the organizer, so it wouldn't distract you. I do have one that says, how long do you buy an option? And that was just a few minutes ago from Long.
Yeah, so typically we go about 3 to 4 weeks out on the trades in terms of expiration date. And winning trades, profit targets can be hit like in a day or two. Sometimes when they really go our direction, become really profitable, you can hold on to them for, I'd say, maybe 10 to 15 days for the really long ones. But a lot of them end up running their course in 5 to 10 days.
Oh, nice. So everybody, I did put it into, and Long says, thank you very much for an excellent presentation. Harold is asking, ATM, ITM, or OTM?
At the money, ATM. That's what we recommend.
ATM.
Yep.
Okay, cool. All right. Anybody else have a question? We still have 1 whole minute left.
Okay. Well, Sherry, thanks for having us.
That's really great.
Exclusive privilege.
We want them to go to toptradetools.com/go. I did put it in the chat. Is there an email that you want them to have in case they have questions?
Sure. Support@toptradetools.com. So support, same URL at toptradetools.com.
There we go. I just put it in the chat. I like to make it so they can click on it. Only 25 people are getting into this, you guys. So if you might want to go and take advantage of it right now. There's also a phone number that you can call, right? 859-963-3445.
So, well, Merry Christmas, Happy Holidays to everyone as well. Thank you again, Sherry. It's great to be here, and stick around,
Mark.
folks. Good speakers coming your way.
Thank you so much. Have a wonderful Christmas, and thank you for being with us.
Thank you, Sherry.
All right, folks. We have Sunny waiting in the wings. Sunny Harris of Sunny Harris Enterprises. She is talking to us today about futures trading with SunnyBands, where the markets are now. She's a full-time trader, mentor, mathematician, programmer, consultant, author. She has 5 best-selling trading books, and she's now writing Easy Language, Object-Oriented Programming Made Easy. Wow, that's kind of deep there, Sunny. Are you with us? I saw you in here.
I'm indeed.
All right. Good afternoon. Thank you for being here. I appreciate it so much. Now, do you like questions on the fly? Do you like interaction? Do you want everyone to hold their questions till the end?
I have more slides that I can cover in 45 minutes. I thought it was an hour. So we probably better hold them till the end, and then you can help me with the chat.
All right. That's what I'll do. So I'm going to make you the presenter right now and take it away.
And how do I get to my screen?
So you should now have an option to share your screen, and you just have to, how many screens are you working with today? We're running
I have 5.
Okay. Todd had 6. I forgot to ask Mark.
How about now?
That's
do you
crazy.
see it now?
I do. Nice. Yep. Green, yellow, red. Traders exclusive today. Yes.
All right. So today we're going to talk about.
Us, and I'll keep it.
I'm sorry. All right.
Said,
Futures trading with SunnyBands, where the markets are now. So we're going to look at how I trade and what I trade, and then we're going to look at where the current markets are. So it's also known as futures trading for the uninitiated and current market conditions. My mouse isn't, I have a thing called Microsoft Mouses Everywhere or something like that. And so my mouse can go on any of these 5 monitors. My passion in life and as a trader is helping beginners and intermediate traders. And this talk is for traders who have not tried futures, or they have not traded much and want to learn, or those who think futures are risky, which is most people, and people who want to improve their trading results. So it's beginners of both types. Here's the disclaimer. You can and will lose money trading. Hypothetical results have inherent limitations. There's no guarantee of future performance. So many folks started their trading and investing portfolios with choosing stocks. Fewer have traded futures since the word on the street is that they're too risky. So I'm going to help dispel concerns you may have and to teach you how I trade futures from my own account. I'm a full-time trader. I've been trading for 41 years. I trade futures and stocks on different time frames. And I do not trade options. I only know how to lose money with options, and I don't like that much. So I'm going to tell you a little bit about myself. I'm going to kind of hurry through this. So let me show you how I trade first. I trade the futures contract on 1 and 5 minute charts. That's the first time frame. And in the long-term stock holdings, I hold a week or more. A little more, and I trade a little bit of cryptocurrencies. I primarily trade Ethereum, not Bitcoin. So this is the kind of insight that what you're going to see here today, that you can sign up for my free Sunny Side of the Street newsletter, and it goes out every Sunday night for free. If you can't find it, just email me, sunny@moneymentor.com. Or you can click on the link if these things are hyperlinkable. Twice I've been rated #1 trader trading the S&P futures using SunnyBands, which I'm going to tell you about, and my dynamic moving average. There you can see the return on that one. Rourke International was my trading company. I have 3 degrees in mathematics and 1 in photography. I've been programming for 52 years, trading for 41. I was a systems programmer for Lockheed, founder of ISCO, which was the world's leader in computer graphics software. I retired when I was 30, and I gave my millions at that time to money managers. They managed to lose in the first 3 weeks, they lost $75,000. And the next week they lost another 50, and so I took it back because I figured I can do that badly on my own. So I taught myself to trade through reading 117 books, and now I've read 733. I keep track of them, all on trading, of course. This doesn't count the novels I read. I didn't enter a single trade for the first year of watching the market, and I would recommend that to everybody. Go simulate it and just watch the market for a while. I published a monthly magazine for 8 years called Trader's Catalog and Resource Guide. I've got 5 best-selling books. There they are. And a 6th one, Going Vegan, with Linda Blair, a friend of mine. And I'm now working, as she said, on easy language, object-oriented programming made easy with my friend Sam Tennis, who's known for being asked Mr. Easy Language. He's got a book called Ask Mr. Easy Language. I've written articles for all the major magazines. We'll run through those real quick. And here are the books again real quick, and then I'll show you the object-oriented one last. So let's see, I've been rated in the top 10 consultants, top 10 courses and seminars, and I belong to all the important organizations related to trading in the markets. You can read quips and quotes on my website, moneymentor.com. There's my phone number and my email if you need me. I like this one. Thanks to SunnyBands, I now have a net worth of over 1.25 million. He started with a $25,000 account. So, I've got lots of those kind of things. You can read through hundreds of quips and quotes. I also post on Facebook at least every weekend. And so you can get my predictions there, or you can get the sunny side of the street for free. I have called against other people's calls. When everybody's bullish, I'm not necessarily bullish, and vice versa for bearish. So what are futures anyway? Well, they're also known as derivatives because the value derived is from the underlying instrument. So the S&P futures is based on 500 stocks, S&P 500, but it's a futures contract. Futures are not like stocks in some ways, and they are like stocks in other ways. If you own a stock, you own a piece of a real company and you can hold it forever. Stocks don't usually drop to zero, though some of them do. And if you trade futures, though, you're buying a contract to take delivery of a commodity at a later date. You could lose more than your initial investment. You could get a margin call and then you're out of there. You can buy stocks, and if you want to set up a margin account and the stock is borrowable, then you can short the stock. But I don't short stocks. I buy and hold stocks for short periods of time, and I trade futures. You will have a margin account if you trade futures because you're borrowing money from the exchange. What is shorting? A lot of people understand what going long means. You buy and hold till it goes up. But what is shorting? Shorting is selling something that you don't own on the promise that you'll buy it back later on the hope that it's going to go down. So here, for instance, is a long trade, and here is a short trade. Why the quotes around it? Because you can't really trade a futures contract on Tesla. It's a stock, not a futures contract. So to go long and short like that, you need a tradable instrument. To trade futures, you need to trade a symbol like the ES, which is the E-mini S&P 500, or corn, or soybeans, or cotton, or something like that. Here's a picture of the E-mini on a daily chart. You can see I have yellow dots. That's called my PHW, or potential hourly wage indicator. It tells me how much money is possible from the swings that you see. Futures contracts you can't hold forever because they expire at a regular interval, usually every 3 months. So to view the symbol on the charts, you need to know when it expires and use the code for that month and year. So for instance, Australian dollar, HMUZ. H stands for March, M is June, U is September, and Z is December. And you have to know what those codes are in order to trade the symbols. And on Money Mentor, I have a table of these things under reference. So futures contracts expire. Some of them expire more often. I think you saw that cattle had more expiration dates on it. You want to look at the history of futures is they used to be all crops and animals. So the crops came to market every 3 months and animals were born and matured every 3 months. So that's why they chose those expirations. Here's the full list of expiration codes, again on moneymentor.com under reference. But these are the ones that are important to me because these are the months that the S&P 500 expires. So let's look at it again. Current contract is March because the expiration in December is now past. The year for March will be 2022. So ESH22 is the futures contract. H, that's supposed to be H with no Z, sorry, is the expiration month, and 22 is the year. So you get ESH22. And there it is on the chart. Now on the left, you see that it's very thinly traded, and that's because it wasn't what we call the front month yet. It wasn't the contract that was traded until along in here. And when people really got to trading it was along in here. So that's why the data was missing on the left, is because it was not yet the front month contract. And it became the front month on Thursday of last week. Most traders only trade the first month, front month, and I do too. Expiration for that contract is Friday. It's always the third Friday of the quarter, or expiration month, and we roll over on the Thursday of the week prior. So let's look at the continuous contract again for just a minute. This is what I call my SunnyBands indicator, and I've developed this around my dynamic moving average, which does a lot to mitigate whipsaw. And there it is closer up, and you can see that price touches the bottom band, goes to the top band, and goes down almost to the bottom band again, and then back up. Doesn't quite make it. That's a real sign of weakness. So in the old days, when exchanges physically delivered the commodity to your doorstep, and they still do for some contracts, but for others, they simply cash you out, win or lose. So if you're in a losing position and your expiration comes, they'll cash you out. You owe money. If they're deliverable, imagine a herd of live cattle showing up on your doorstep. I used to worry about that. So you don't want to take delivery. Expiration is the third Friday of the third month, and rollover is the Thursday of the prior week. Traders roll over on that Thursday and begin trading the third month, the front month. I have it on repeat on my phone, so it's always circled, showing me that, let's see, 1, 2, third Friday, so the Thursday of the week prior is rollover, and it pops up on my calendar in case I forget. One of the things that's really important when you're trading something is how liquid is it. So in Stocks and Commodities magazine, they publish in the back of the magazine, they publish a futures liquidity chart or table. And the E-mini is always the most liquid. It's always right at the top. And the 10-year note comes next, but the NASDAQ's down at 7th. So I don't trade the NASDAQ futures. YM is at 19th. So the Dow is way down there. My rule is don't buy something you can't sell. That's why I trade the E-mini futures, because you've always got enough liquidity to find a buying or selling partner. Right there. So let's look real quick. If we compare the Dow and the NQ to the E-mini. You see the E-mini on top. I've marked turning points. The Dow is next, and then the NQ, which is the NASDAQ. And you can see that they are very similar in their directions, although right now the NASDAQ's kind of fighting the Dow and the E-mini. When you're trading stocks, you pay the value shown on the quote. So if Google cost $29.70 last time I looked, Microsoft $3.36. And if you don't have a margin account so that you can trade on borrowed money, there's no leverage. You pay dollar for dollar what the share price is quoted. Futures are leveraged, though, highly. On that, there we go. So here you can see a table of futures margins rates. You see that the S&P E-mini is 12,100. It's actually 12,650 right now. So if you want to trade one contract, you've got to have $12,650 in your account. One share at my last reading when I made this presentation was $4,685. There are 500 stocks in the index, which gives you $2,342,500 for the price of what you're going to be controlling. So for $12,650, you're controlling over $2 million. That's just 0.6% that you have to put up. It's highly leveraged. And now we're going to answer the question, aren't futures risky? Some people think that because you're leveraged, you can lose all of your money, and you could lose a lot. But if you don't have enough money in your account to cover a loss, you will lose. You'll have a margin call, and then you have to bring your account back up to margin level, or they'll close your account and you can't trade anymore. You can lose more than is in your account. That's a possibility. Your broker will call you or send you a notice by email if you have a margin call, and they want that money in 24 hours. You don't have much time to fix it. The E-mini is traded at $12.50 per tick, or $50 a point. So if you're trading 4,685 and it goes to 4,686 and we're long, then you make $50. Here's a short trade on a stock. It makes 300 points profit for $1,200 in 21 days on $12,000. But on the E-mini, you can see the same trade in the same period of time, and it makes 275 points, but 275 times 50 is 13,750. So you make over 100% in the same 21 days trading E-mini versus a stock. Does it ever go to zero? Well, it hasn't in the 41 years that I've been trading, although it feels like it's going to sometimes. What if the world came to an end? Would it go to zero? Yeah, but you'd have worse problems. The biggest point drop I've ever experienced was 1,186 points during the COVID crash. Now, that's not the biggest percentage loss, but it's the biggest point loss that we've had. So you got to remember, you can't hold on to a futures trade waiting for it to rebound. And the question is, again, why can't you hold it forever? Because it expires every 3 months. So what if the rebound for that contract takes a year? You're stuck having to get out. There are also limits in place to avoid crashes. So you'll see from Investopedia, there's something called limit up and something called limit down. And when a futures contract moves more than that amount either direction, then they put circuit breakers into effect and stop trading for 5 minutes and then 30 minutes. And they try to regulate the volatility. So now that you know it's risky, I'm going to show you how I trade and have been for 41 years. And I even have my strategy for sale. And I'll teach you exactly how I trade it. It's the same one that made me #1 trader years ago. So the first thing I put on any chart, I call attractors. They're like support and resistance, but Fibonacci lines are attractors and moving averages are attractors. It's anything where you can support and resistance, including moving averages, where the price tends to revert to the mean. That means it's going to go back to a price it's seen before. So next, I'm going to show you my SunnyBands indicator. It's based on the DMA, dynamic moving average, that's in the center of the bands. So you see the gold and purple lines in the center. That's the dynamic moving average. And you can see, if you know anything about moving averages, you can see that this thing stays out of the way of whipsaw. I've got 3 attractors on this besides SunnyBands, and you can see that price hits these attractors over and over and over again. It keeps hitting attractors, and I call it the confluence of price. I don't draw them at the tops and bottoms of every wick on a candle. I draw them at the confluence of price, or the preponderance of price. Here you've got a 15-minute chart of the same thing, and you can see the 2 attractors on there. So we can see my PHW yellow dots on this chart calls the highs and lows pretty well, almost perfectly, but it's not a strategy, it's an indicator. So if I use those 2 things and I put them on what I use TradeStation to trade and to do my analysis, and they have a thing called radar screen, which is like a spreadsheet. And if you sort by my PHW, which stands for potential hourly wage, you can see that Amazon's always right up at the top. The NASDAQ's, of course, first because it's the index, but then Amazon is the most liquid. And you can look at my DMA, dynamic moving average, and see that at that point, Amazon was bullish. 2 lines up means it's moving up. A red in a red cell, it moves up and moves down. That means it was bullish, but now it's turning. So I use all these 2 things together to pick stocks that I'm going to buy. Oh my gosh, my presentation just disappeared. Hang on. There we go. All right, so Amazon is always the most tradable. And you can see from yellow dot to yellow dot, it goes up and down in large swings, or 400-point swings at a time. So Amazon, I like to buy and hold, get out, buy and hold again. So that's one that I trade frequently. GPS, not so much. You can see it just goes down, and the swings it does make are very small. The DMA crossover is my macro clue. I use that to tell me if the market's predominantly long or predominantly short. But it's not early enough for me, so that's why I created SunnyBands, which is faster. And then I created the DMA histogram, which is even more precise as to turning points. The DMA histograms on the bottom of this chart, you can see there's gold bars going up, and then that shows you a good exit point. Let me go back 1 slide. So this shows you a really good exit point when the gold turns to red. So every time it goes up on gold, turns to red and goes down over and over again. And I use these SunnyBands, for instance, here. I don't know if you can see this. I hope you can. Price hit the top SunnyBand and dropped, but gold is on top, which tells me that it's not going to drop all the way to the green SunnyBand. It's only going to drop to what I call the lower inner band. So it drops to this teal line, goes back up again, drops right back down to this lower inner band. This time, at that point in time, purple was on top. So it's only going to this upper inner band, hits the DMA, and then we're out of there. So I like to look at the DMA, dynamic moving average histogram, which is at the bottom. And you can see where I've drawn lines to show you the longs and shorts. And those are based on that histogram. And that's all there is to it. I look at the tractors. I look at Vantage Point. I don't know if anybody knows Vantage Point, but they do a good job of predicting tomorrow's market. And I trade the E-mini on 1 and 5 minute charts using the SunnyBands. And I might trade 5 to 10 times a day. I'm a fast trader. With equities, though, I buy and hold for weeks to months. So here's a picture of a Vantage Point prediction, and you can see, what did they predict for today? This thing doesn't want to go because I've got that hyperlink. There we go. Next step is I look at SunnyBands and the DMAH on a 1 minute chart, and I add a 5 minute chart to show me the long-term trend. So if you can't figure out how to do this and you have TradeStation, I've got a YouTube little movie on there that shows you how to do it. And there's my YouTube channel. So here's what it looks like to have 2 data streams and 2 SunnyBands on one chart. It's nice because you can see the SunnyBands itself touching the outer SunnyBands and back down to the lower SunnyBands over and over again. So it gives me a 1 minute and 5 minute both on one chart. My current market analysis is the Dow, the ES, Bitcoin. I'm going to show you Ethereum and Tesla and Google. Here's the Dow. Okay, looks to me like it hit the SunnyBands at the top, hit the SunnyBands at the bottom, came up here, purple's on top, and it touched the upper inner band, and it's moving down toward the midline, which is the average of the purple and gold. Here it is on the E-mini contract, same story. Purple on top, it's going to move down to the midline, to the lower inner band. Sorry, LIB is lower inner band. Bitcoin. Well, what do we see for Bitcoin? Looks like we've got a little more correcting to do before we have any more upside action. And right here's where it predicted, right at this top, it's where this DMAH or histogram predicted shorting. I don't short Bitcoin, but I do get out. And same thing with Ethereum. Touch the upper band, hit the lower inner band, touch the upper inner band, and on down. Tesla, I love Tesla. I have a lot of Tesla. And as soon as it goes down a little more, I'm a buyer again. Google, same story. Touches the upper, touches the lower, touches the upper again. On strength, it comes back to here, and then it comes down and touches the midline. Gold's on top that entire time. With gold on top, see, it says even gold on top. With gold on top, we can be buyers. Well, that was faster than I thought. In short, what I do is look at vantage point. I draw attractors on the charts. I put SunnyBands on the charts and the DMA histogram, and then I read the signals and I take trades. And hopefully I make money. Can't be any more disciplined than that. My website again, moneymentor.com. I have all kinds of pages on here. My favorite one is resources. I post here all the things that I need as a futures trader so I can refer to them. I do put out the Sunny Side of the Street. It's under books and articles. It's like an article. And my products and services are all listed there, including SunnyBands indicator and the dynamic moving average histogram. These are all products that I use in my own trading. I did not develop them to sell them to you. I developed them for my own trading, and I make them available to you. And I'll show you exactly how to use them, just as part of the purchase price. I'll spend time on Zoom, and we'll share screens, and I'll show exactly what I do. Moneymentor.com. Be sure to look it up, moneymentor.com. I've been on the web since 1995 with that website. I was one of the first out there, and I'm still going strong. I don't hold anything back. I'm happy if you want to give me a call just to talk. I'd be happy to talk to you. Here's my order form page. You can see that it's got everything I know there. For a special offer for today's attendees, I'm going to give 20% off if you order anything before the end of this week. That's including indicators, strategies, and my consulting. Or if you're not ready by the end of this week and you want to wait a while, December 30th is the cutoff, and at that point you'll get 10%. If you wait longer than this week, it'll be 10% off. Includes consulting and mentoring time as well as indicators. If you want a 7-day free trial and you've got TradeStation, shoot me an email or give me a call, and we'll set up a trial for you so you can use them. I will need your customer number, your email, and your phone number in order to do that. But that's all it takes. Okay, I think I'm almost done here. Let's see if there's any questions. There's no such thing as a stupid question, so just ask away. Sherry?
Checking now, checking now. Everybody, if you have questions for Sunny, this is the time to do it. Let's see. It looks like Stephanie's got a couple of questions here.
Sure.
Let's
And I don't see this chat, so I don't know.
Okay, all right. I'm going to turn you into an organizer now because usually if you like to wait until the end, having organizer ahead of time means that you get all this stuff popping up on your screen. So,
Oh, I see. That's why I didn't see it. I see.
Yeah.
All right. Well, so what did Stephanie say? Because I can't see the chats.
I'm going to, there you go. Okay, so her first question was, does TradeStation allow one to analyze trades? Trading. Okay.
Good
You can
if
see
I don't
those
want
now,
to.
right?
Seems like you spend a lot of time sitting in front of a computer. What strategies are good if I don't want to do that? Okay, that's a good question. I do spend a lot of time sitting in front of my screen, and I've done it for a whole lot of years, so I'm used to it. But if you don't want to sit in front of your computer, you could just put it on a daily chart and trade the daily charts. And then, you know, you might make a trade every few weeks. So that works just fine. Anything else?
We've
I went
got,
so fast. I got through faster than I thought.
yeah, can you explain what a dynamic histogram is?
Sure. The dynamic moving average is proprietary math. Say I've got degrees in math, so and I'm a programmer, so I worked for a long time, 18 months, researching why moving averages were always putting you in whipsaw. Markets trend 30% of the time, and they go sideways 70% of the time. So in the 70% that they're sideways, you're going to lose money. You might catch the trend if you get it from bottom to top, you'll catch the trend, but then you'll give all the money back. So I took a look mathematically at these moving averages and figured out a scheme where I could make the moving average not cross over back and forth, and it holds you in trades longer. So that's the dynamic moving average. And the histogram at the bottom that I showed you is the difference between the purple and gold lines. So it's a measure of the difference. And when I'm sure you saw on the chart, when it's gold, that means that the gold is on top. And if it's moving up, it means that the moving averages, the gold and purple dynamic moving average lines are moving farther apart. As they move closer together and turn, it turns to red, which to me is a shorting opportunity. And when it's red, it means that the moving averages are getting closer and have turned with purple on top. Okay. Interesting. Strategy good. No, that's not one. Let's see this. I can't see all fine. That's not a
There's
question.
a way to
Do you see
pop
any
it
more
out
questions?
if you want to see them all.
How do I do it? Oh, pop it out.
Yeah, on the right-hand side, there's a little box with an arrow pointing to the left. If you
Got
have
it.
the same, yeah. So that way you can pop it out and be able to see the whole question. It's hard when it's in the little dock.
Yeah, it is. But you know what? I don't know if I'm not a presenter or what, but I don't see the list of attendants.
Yeah, and I assigned it to you. So, but let me just read it, and then that way.
Please.
Tom wants to know, can you show some examples of using DMA histogram to pinpoint entries and exits?
You bet I can. Let's go back some slides.
And Stephanie, we are going to come back to your questions.
Wait. While I go back here. There. That's the DMAH, dynamic histogram. You can see right here, first trade like this, it turns red, it starts moving down. That's a short trade. Moving down, 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 still now it turns purple, means purple's on top, still moving down. So from this high before the yellow dot is where I went short and went short down to there. Likewise, when it's going on red and turns to purple, and then as soon as it turns green, you see on the bottom, that's a signal to go long. So that's how the DMAH pinpoints the trades. Did that answer that?
What do you think, Tom? So Stephanie's got quite a few. I'm sure he's gonna say something in just a second, but Stephanie's got quite a few.
You completely cut out. What?
Can you hear me now?
I can, yes.
Stephanie was asking, why do you prefer the shorter trading time frames?
There's more money to be made. That's a simple one. There's more money to be made in the shorter time frames than in the longer. And I calculate that using my yellow dots, the PHW indicator, and the radar screen that I showed you. And that tells me how much money is to be made in each time frame. So if you compare them year over year to each other, there's a lot more money if you trade short term.
Nice. She also wanted to know, did the indicators work only in TradeStation?
Yes, only in TradeStation.
All right. Okay. And is there a way to analyze trades within TradeStation, performance, etc.?
Oh yes, they have a wonderful performance report that gives you all the statistics you could ever want about your trades.
Awesome. All right. Do we have any others? I'm looking back through. Does TradeStation allow one to analyze trades trading? Does it have a built-in trading journal?
No, it doesn't. That's a good question. You mean, well, it has a built-in list of all the trades that you've taken. So you can see when you entered and exit and how much money you make on them. But if you mean by journal where you can take notes about how you were emotionally or why you took that trade, no, they don't have that kind of journal. But they do have a journal of all the trades that have been taken.
Okay. And let me see something. Okay, Silver says, howdy, Sunny. I just wanted to let you know that I enjoy your speaking about trading so much that I actually had a dream about you last night.
Oh,
well,
my
that might
goodness.
be.
Oh, my goodness. Maybe I don't want to know that.
We don't want any details, Silver.
Yeah. I'm glad you enjoy the presentations. Thank you so much for attending and for your nice comments.
Let me see. There was something here that I wanted. Okay, so this is another Stephanie question, and I actually think I'm very interested to hear the answer. Why are Bollinger Bands, or the variations on it, not dynamic?
Good question. Because, and I told you, I made my dynamic moving average to avoid whipsaw. Bollinger Bands are based around an exponential moving average. So the exponential in the center, moving average in the center of the Bollinger Bands whipsaws a lot. So that's my first objection to it. And the second is that the bands on the outside of the Bollinger Bands are based on statistics, and mine are based on average true range. So I care about where the market's going now, which is current activity, rather than the statistics of where it should go. I don't care where it should go. I want to know where it is going.
Yeah. So, I mean, that would be why your system dynamic is different from why it is different in other systems.
It's very
right?
different from Bollinger Bands. If you put them both on the same chart, you can see that they're very different. Cool. I mean, yes, they're both bands, but mine, I think, does no disrespect to John. I like him a lot. I know him well, but Bollinger Bands, I personally can't trade with them. Whereas with SunnyBands, I can see where price is going because it's going to the bands. It goes up to the bands. It goes down to the bands.
Sounds like it makes sense.
Yeah.
So one last one from Stephanie. One last one from Stephanie. Preponderance of price. How is it different from VWAP?
Well, VWAP is volume weighted average price. And so if you put the VWAP on the charts, you're going to see where the most volume took place. And I don't take volume into account with my dynamic moving average at all. It's just price activity. And it doesn't tell you how many shares were traded or what the volume was at each level. It's just the raw moves.
Awesome.
VWAP's a good thing to put on your chart though, because when it breaks the VWAP, one way or the other, it's telling you that the price is likely to move too.
That's
But
a
I
gem
have a
right
lot of
there.
trades in between the VWAP.
Okay. Cool. All right. Anybody else got questions? Oh, sorry. I'm a little alarmed so that because I go and do something else for a little while during your
You
talk.
take a nap, do you?
No, I wish. I listen with one ear while I'm doing something else, getting the next webinars
Speaker
lined
ready?
up.
Yeah, I understand that. You've got a busy job then.
Multitasking at its finest. All right, folks. I think
I'm going to
we
run
have
through these slides 1 second.
good. Okay. Because
if
we
I
have
may.
5 minutes left for Sunny. So if y'all have questions, you
I
need to
told
ask
you
them
about the
now.
special offers.
And
And
what's that?
then
Now I have a link
we
for
did
you.
that. You have what?
Want me to post your link?
Sure, that would be great.
At moneymentor.com/special offer.
I don't think I have special offer. I think it's just go to the order form and put your price in there. So it's 20% off until the end of the week and 10% off after that up to December 30th. So thank you, Dan, for hosting the event, and Sherry for doing all the work. And thank you, audience, for your attendance. I really appreciate it. And here's my contact information.
Awesome.
Again, just call if you want to chat.
Perfect. I'm going to put https:// I'm just putting that in the chat so people can click on it.
All right, fantastic. Thank you.
And I already did your email. And the phone number is, you want them calling your cell, hey?
That's, yeah, yep, it's open.
So,
I work 7 days a
908
week.
3070. There you go, folks. If you need to copy and paste anything. Stephanie says, thank you very much.
Absolutely. My pleasure.
I just made a mistake. Sorry, Arif. I made a mistake.
What did you make a mistake on?
I wrote money maker instead of money mentor.
Oh, no, there is a moneymaker. Don't go there.
Okay, moneymentor.com. Wow. Maybe I should go take a nap. How about that? Can I erase that? I don't think I can erase it.
I don't think so.
Oh,
It's
just
okay.
when I start
They'll
thinking I'm
find me.
perfect.
They'll find me. All you have to do is put Sunny Harris into Google.
Yeah, I put the correct link in there this time.
All right, thank you for that.
Arif, and thank you for looking out for Sunny that way.
And enjoy Wally next. He's phenomenal.
Oh, fantastic. I happen to know he is here. And so if you want to, do you have anything else you want to add?
I think I'm done. Thank you so much.
Well, you did great for thinking you had an hour and then cut down to 45 minutes. So thank you so much. I appreciate you being here. I'll be sending out dates for next year so that hopefully you'll want to come back again. And
all right. Well, if
you
your
have a
audience
wonderful.
requested, I'll be happy to do it. All
right. Well, happy holidays and Merry Christmas and whatever you celebrate. We wish you the best for it. And
thank you.
Thank you.
You too.
Have a good day.
You too. Bye-bye.
Bye-bye. All right. Oh my, we've had such a great lineup here today. And I wonder, can you see my screen now? We have Wally, I don't know how to say your last name, so I'm going to let you tell me how to say your last name. Should I take a chance?
Olopade.
I was going to say, I should have taken a chance because I would have been right. Welcome. Thank you for joining us. Let me just, I'm going to introduce you and then I'm going to pass it over. Do you like to ask questions and get interaction during the presentation, or do you like your questions held to the end?
I don't mind it during the presentation. It actually helps that way.
Okay, then I'm gonna make you an organizer as soon as I get done here. Our final speaker is here. Thank you for joining us, Wally. He's with Right Side Trading. He's gonna talk to us, and I shortened your title a little bit, but I know you'll take care of that. Investing in seasonal stocks and avoiding the ones that would fail. And Wally is an expert stock market analyst. He's been featured on Yahoo Finance, Benzinga, Traders Talk Live, and many more media outlets. He's consistently timed many of the market tops and bottoms and has used this to bounce back from the 2008 financial crisis. Wally founded Right Side Trading in 2013. He's been teaching individuals how to generate income and build long-term wealth through trading and investing safely. He teaches how to view each stock as a customer and how to build a list of stocks, quote unquote, customers that can help you grow your portfolio. So thank you again for being with us. Let me change over to you as the presenter. Yes, and then I'm also going to, let's see if you can see the questions box. I have to make you an organizer.
Wow.
So everybody, welcome Wally, and let's see if he can see your questions. All right, don't be shy. Come on, somebody jump on in there.
Yeah, anybody, just type in a double Y just so I know that I can see your chats.
There you go.
That would be helpful.
I can see your screen, Right Side Trading, right now.
Okay, there you go. All right, thank you,
All right.
Harold. All right, so
Somebody said, "Where's Derek?"
where is Derek? I have no idea. That must be
Okay.
an old customer of ours. So yeah, excellent. Well, welcome, guys. Okay, all right. So can I go ahead and take over now?
Yes, sir. Take it away. I'm muting myself and listening with one ear.
All right, very good. Okay, so welcome, guys, and thank you, Dan, Sherry, for inviting us. Sunny was just speaking. I feel like I've known Sunny now. We've been on multiple speaking events recently, so I'm getting to know her very well. Love the work that she's doing, and appreciate her sending a shout out. But at the same time, today I wanted to talk to you guys initially about seasonality stocks, but I thought at the last minute, and I hope you guys don't mind it, but I thought with what's going on in the market, Sherry kind of read a little bit about my bio, and she said I've timed multiple tops and bottoms multiple times, and so I thought the recent drop that we had in the market and the recent bottom that we just had in the market, I thought, maybe I should share about how I was able to spot that, because part of what we do is we try to see things before they happen. Like we look for the warning signs. And so part of the reasons why we call our company Right Side Trading is because I really do not like hindsight stuff. I like to be able to take the data that we have right now and anticipate what's going to happen going forward. Okay. So that is what we're going to try to do today, with the hopes that I'll show you how to time tops, how to see tops. I don't even believe in timing more than I believe in seeing the top. And so if this is something that's going to be of interest to you, knowing how you can tell when we're at the top, knowing how we can tell when we're at the bottom, today we'll focus on the top. And then hopefully that will kind of like just open your eyes to seeing, wow, these are very clear, concise ways of telling when the market or stock is at the top. Okay. Okay, so let me start by sharing this with you. This was the pre-pandemic, and every weekend we have a report that we write called the Right Side Report. And in this Right Side Report, I kind of give people a heads up of what the data is showing us ahead of time. And then we use that to say, this is what we should be preparing for the week based on the current data that we get in. Now, I share this with you because in January of last year, January 24, 26, that weekend, I wrote this report. And in there, we started seeing warning signs that something major bearishly was going to happen, if that's the word. Something bad was going to happen to the market, okay? And then you can see this is just an excerpt of that report where I said, because the market is in unison, we need to be ready for either a slowdown at best or a reversal at worst, okay? And then I said, the writing is already on the wall. It is time to take profits, exit positions. The market is warning us to take heed. Now, I shared this because I always try to tell people, guys, there's information, data that can show us what is about to happen before it happens. A lot of people try to say the news moves the market, but I'm here to say that there are people, yes, I agree that the news moves the market, but the question is, what is the hidden patterns or hints before the news comes out that people are not paying attention to, because so many people focus on, let me see what the news says. But if you learn to focus on what are the hints prior to the news coming out that we can see, and then be expecting some type of news to come out in the future that would put us on the right side of the market, I think if you were able to do that, you would be on the right side of this market a whole lot more than on the wrong side. Does that make sense? And so if you notice how we even said what we said here, we were very precise, I mean, it was a strong statement. It wasn't one of those where we sit on the fence and say, well, you know, the market could go up, this is how you hedge yourself. The market could go down, this is how you hedge yourself. It was one of those things that, look, the best case scenario is that the market is going to go sideways. It's going to slow down. But if what we're seeing is true, it's going to reverse. And the writing is already on the wall. It's time to take a profit. So this is where we're telling people, get out, get out, get out. The market is wanting us to take heed. Then the pandemic showed up about a couple of weeks later, market tanks. Then we find out, oh, it was a pandemic, okay? We also picked the bottom, but I'm not gonna talk about that today. Most recently, on November 22nd, the most recent drop that we just had in the market, you will see here in that same report, on the 22nd, we wrote, you need to get insured or you need to get out. And I said, you do not want to be long, at least in the short term. You do not want to be long. Let me make that very, very clear. You do not want to be long. This is on the 22nd because we saw data on that day that said, market is getting ready to drop. We further went on to say, look, there's a pattern that we have termed the hilltop pattern that we are now seeing on the S&P 500. And because of this, it's making us say, whoa, this is not good. So again, we didn't know what was going to cause the market to drop, but we started seeing patterns that said something bearish, big. We've topped out. Something is about to happen to drop the market. And then we went on to say, because of these things that we've seen, combined with our knowledge of market cycles, we are expecting a pullback to happen very soon. And so what is our plan? Our plan to keep ourselves on the right side of the market is to tighten up our stops or take our profits. Then we shall wait for the next buy signal. All this happened prior to the drop that took place in the market. And I'll show you this chart right here. This is all that I shared was based on when this high took place. So the question is, what did we see before this drop began? Now, 2 or 3 days later, on this day right here, was when the Omicron variant was announced. Now, prior to that, nobody, I mean, when I say nobody, I'm talking about the general public. The general public had no idea that they were going to be announcing that a new COVID strand was going to be coming out. And this is why I say, okay, yes, the news is what dropped the market. This news of the Omicron variant was what dropped the market. But what was it that we saw up here that told us something bad is about to happen? Okay. Again, very similar to what we did in 2020. We've done it in 2016. We saw the bottom the Friday before the election, okay, in 2016. We saw that, and that's why I said we've been calling tops and bottoms since 2016. And again, when I tell people, I said, we don't guess, we don't hope, we don't wish. We see, we know, and we expect. So what is it that we saw? What is it that we know? What was the hints that told us, wait a second, something is wrong, so that we can keep ourselves on the right side? That's what we're going to talk about today. So a little bit about myself, who I am. You know, Sherry said this earlier. I founded Right Side Trading. At the time, prior to me starting Right Side Trading, I was a complete novice. The 2008 financial crisis was what got me involved in the stock market. In 2008, we all know what happened. I lost everything, had to build everything back up. I remember when that 2008 financial crisis was happening, people were saying, no, we're not in a recession. Some people were saying, yes, we're in a recession. I didn't know who to believe. I was nowhere involved in the stock market at that time. I was involved in real estate. I lost everything in real estate. And I remember saying to myself, wow, who can you believe? And then fast forward 4 years later, or even now, everybody will tell you, yes, 2008 was a recession. But I remember very vividly while I was going through it in 2008, it was always maybe, maybe not, maybe, maybe not. And I swore to myself that I never want to have to live like that again. I don't want to have to depend on the media telling me what's going on. What was the data that the ones who got it right, what did they see was my whole goal, okay? And so when I got involved in the stock market in 2013, I did not even know the market had bottomed out. I still was in the camp that thought we were still in a recession. Market hit all-time high in 2013. I'm still thinking we're in a recession, right? Only to find out that 4 years ago, the market had hit bottom. And so I was furious again. And so I told myself, I said, look, when I got involved in the stock market in 2013, I said, I'm not here to learn how to make money first. The first thing I wanted to know was how can I tell when the market has topped out? Because all I could hear was the bubble, 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 bubble. The bubble was going to pop. The bubble going. Here's the reason. Here's 10 reasons why the market is going to drop. Here's the reason why this is going to happen. What's going on in China is going to affect America. And I was always inundated with this whole concept of the market was going to crash. Okay, can anybody relate to that? And all we've been seeing is market making new all-time highs. And then it's like, wait a second, this is not right. And we get frustrated and we say, why is this happening? It shouldn't be going up. I was one of those guys. And I said, I don't want to be that way anymore. I want to know how to tell when the bubble has actually popped. Okay. And not in hindsight, but as it's actually happening. Okay. And that's what I did. So in order to do that, I had to learn technical analysis and quantitative analysis. And when I studied that and really understood how to use this information, I was able to corner the market. Okay. Be able to pick tops and bottom. And so today I'm going to share one. There's a lot of them, but I'm going to share one sign that when you see this, chances are very, very high that the market is going to roll over. Okay, and that is something that we call the hilltop candle. It is exactly what we saw on November 22nd. It's what we saw on January 24th that told us the market was getting ready to roll over. Okay, and so we call this the hilltop candle. It's the most powerful candlestick signal that I know that warns you about a crash before it actually happens. So let me show you what this looks like. Well, actually, let me do this. Sorry about that. So a little bit of history on how I actually discovered this, okay? I like to use this company right here called Bosch Health Companies. Back in the day, they were called Valiant Pharmaceutical. If anybody ever heard of this company back in 2015, you'll know what I'm talking about. In 2015, Valiant Pharmaceutical dropped tremendously from $260 all the way down to about, I want to say $20, okay? And I remember there was a big hedge fund guy that lost a lot of money during that period of time. And again, I remember people talking about, oh, is this going to go up, or should we be buying this? Is this a discount price that we should be buying it? And the hedge fund guy that was losing a lot of money kept on saying, no, everything is fine, everything is fine. But the stock just kept on tanking and tanking and tanking. And at the end of the year, he lost a huge, huge amount. And I remember thinking to myself, wow, if this hedge fund can lose this much, and he was telling us, no, everything is fine, what chances do we have? And so that's where my research began, because I came back to this particular stock. And again, back then it was ticker symbol VRX. They've changed that since then to BHC. And I came back here and I said, what was it at the top that would have told us something was wrong? Okay, so that now we don't have to rely on what the hedge fund manager is saying, or the CEO is saying, or the media is saying. It's like, what was the data that would have told us that something was wrong? And so this is where we're going to start focusing on today. And so what this hilltop candle is, some people will call it the outside range candle, but I like to call it the hilltop for a couple of reasons. Number one, at the time when I was researching this, I didn't know what the outside range was. But what I noticed in that Valiant Pharmaceutical, what happened at that top right here, what stood out to me was these last two candles at the very peak. And it was the first time that I noticed that the high of this red candle was higher than the high of the green candle right next to it. And the low of that red candle was also lower than the low of the green candle next to it. That was the first time I saw that. I said, that's interesting. What is this? At the time, I didn't know what it was. And I said, well, at that time, I went back and I said, could I find other stocks that I know have tanked 40, 50, 60, 70, 80, 90% and see if they had the same pattern? And to my amazement, I noticed that it appeared on a lot of stocks like this. And so at that point in time, I said, what exactly is this? Could this be a warning sign before market crashes? And so what the hilltop pattern it looks like is like you see right here. The high of the red candle is a 2-candle formation. And so the high of the red candle needs to be higher than the high of the green candle. That's what you see here. At the same time, that same candle's low, which is the lowest low, right? So you include the wicks in there, must be lower than the low of the green candle to the left, okay? Now, there are some people that seen this in the past and say, oh, you're not sharing anything amazing. This is just XYZ. And I said, there's some misconceptions that people have, and please don't make the same mistakes that these people have. So let me give you just a couple of things that I've heard people say, and they just dismiss this powerful candlestick signal because they misunderstand what this is. So the first thing is a lot of people will confuse this with what is called a bearish engulfing signal, okay? And this is what an bearish engulfing signal looks like, all right? This candle right here looks like a bearish engulfing signal. At the same time, this candle right here, these two, is the bearish engulfing signal. Wow, so both of them are bearish engulfing signal. But one of them also has the quality of a hilltop where the other one doesn't. And so just because you see a bearish engulfing signal and people, oh, it's just a common bearish engulfing signal, please don't make that mistake. Make sure that it has the quality of a hilltop. And again, so what's the difference between these two bearish engulfing signals? This one on the left is a hilltop. Why? Because the high is higher than the previous high and the low is lower than the previous low. Whereas this one right here, even though it's a bearish engulfing signal, the high up here is not higher than the one on the left. And the low here is not lower. So yes, they are both bearish engulfing signals, but one is a hilltop, the other one is not. So if I saw two of these candles on two different stocks, I would say this stock right here is getting ready for a big drop. Does that make sense? Okay, so that's the first one. The other misconception that people confuse this with is something called a bearish Harami signal. Okay, so in a way, a hilltop candle can also be a bearish engulfing, as well it can also be a bearish Harami signal. But we have to make sure that we also identify whether it has a hilltop. Does that make sense? And so here's a hilltop again. This is a bearish Harami signal, but at the same time, it also is a hilltop. So it's two candles in one, two candlestick formations in one. Whereas this one right here is just a bearish Harami signal. Again, why? Because the top of this red is lower. We need it to be higher. It's not. Now, the low here is fine, but this one is not. So this doesn't make it a hilltop. It's a Harami, yes, but a hilltop, no. Over here, on the other hand, we have a Harami, yes, but we also have a hilltop as well. Makes it check. So if I see these two now, again, I would say, wow, if I saw this pattern here on one stock and I saw this pattern on the left on another stock, I would say this stock is getting ready to drop big. Does that make sense? Please give me a why if you understand this, because this is huge. Don't make that mistake, okay? Give me a why if you understand what I'm talking about here. Make sense so far? Good. Excellent. Thank you. All right. So let's go back and see how this helps us, or some rules. And I'll show you some examples. Absolutely. I'll show you some examples. One of the first things that I tell people, please don't worry about volume, because I know a lot of people focus on volume. I say, look, when a hilltop pattern comes, forget volume. You do not need volume. Okay. So I don't want you to use volume to mistaken what's going on here. Don't worry about what the news is. Okay. This can stand alone. If you have other signals, that's fine. But again, just make sure that you understand, wait a second, a hilltop pattern has showed up. We need to be aware of this. Now, this shows up on any time frame. I prefer to use it on the daily, weekly, and monthly. Okay. But one thing I would tell you, the higher the time frame is, the worse it's going to be for that stock. It just logical makes sense. If I see a hilltop on a monthly chart, I was like, whoa, something bad is going to happen for this stock for months to come. If it's on a weekly, for weeks to come. If it's on a daily, for for days to come. Okay, so just keep that in mind. So the higher the time frame you see this on, the worse that stock or that market is going. The condition of that stock or market is about to become. Make sense? And then mainly the last two things is you would typically find a hilltop after a huge uptrend. So you don't want to just go out there and find it every single where. The major thing is you want to see stocks that have ran pretty high for a while. So a lot of these, and you can actually use this with cryptos too. So a lot of these crypto stocks that ran up pretty good, or penny stock that has ran up pretty good, right? Shot up 100%, 200, 500% in a matter of weeks or days, maybe in a month. And it's like, wow, it's going to come back down. You just know it's going to come back down, but you always asking yourself, when? What is going to tell us that it's ready to go back down? I encourage you to look at the daily, weekly, monthly, maybe even like the 4-hour chart or 1-hour chart to see where's the hilltop. Because if you see a hilltop on one of those, especially after they ran up 100, 200, 300%, chances are that's it. It's getting ready to do what? Roll over. Okay. And the last thing is you can also find it at the base of a downtrend. You can also find it at the base of a downtrend. So let me show you, to answer Arif's question. Let me show you, this is what happened recently, okay? Right here, this candle right here, remember I said this candle here was what told us that the market was getting ready to run into trouble. Why? Look at the high here compared to the high of the previous candle. And look at the low here compared to the low of the previous candle. Okay, when we saw that, ladies and gentlemen, when we saw that, that was what prompted us to say back here, get insured or get out. You do not want to be long. Okay, let me be very, very clear. You do not want to be long. Okay, I said this hilltop pattern, this is all in our report on the 22nd. This hilltop pattern that I'm seeing right now on the S&P 500, where was it? It was on the S&P 500 right there. That hilltop pattern that we've seen is what I said is making me say, whoa, this is not good. This is not good. Now, prior to all this, we had no idea they were going to come out with the announcement of the Omicron variant, but we knew something was wrong. We knew something was getting ready to be wrong. Okay. And so the right side of the market was take your profits, place your stops, expect the market to pull back. Okay. And that's exactly what happened. All right. That's exactly what happened. 2 days later, boom. This was when the news came out. And this is where I sit back and I say, see, I keep on saying it. Yes, the news dropped it, but we saw the warning sign before that happened. Okay. Yeah, I'm sorry. It was supposed to be 2021. No, sorry, not November 2020. Thank you for pointing that out, Sarah. It's 2021. Okay. So then I'm gonna just share this one with you very quickly because Sunny is a witness of mine. Sunny and I were on a podcast interview, and they were asking me at the podcast interview. They said, "Hey, what do you think the market's going to do?" I said, "Market is going back all-time highs." And she's like, "How do you know?" I said, "The market has established the bottom." And I said, "How did you know the market has established the bottom?" And I say, "Because of this." Can you guys see this? Remember what I said? It can also appear in a downtrend. So I saw this and I saw this. I said, wait a second, we just established a bottom. Just like we established a top here, we've now established a bottom. And so at that point, there's like, what's your probability that the market is going to go higher? I said 100% the market is going to go higher. And then I retract. I said, well, I can't say 100%. Let me rephrase that. Let me say 99.99%. I am absolutely sure that the market is going to go higher. Why? Because I've seen the bottom. So Arif is saying, so the left-hand candle, the left-hand candle can be either color. Does the right-hand candle have to be red? No, actually it could be either color. It doesn't matter what the colors are, left or right, okay? I just prefer the red. but it doesn't have to be. It could be both. It could be two green colors. It could be two red colors. It could be a red and a green and a red. It doesn't really matter. Does that make sense, Arif? It's just the fact that one candle has a higher high and a lower low than the previous candle. That's all that matters. Okay. Okay. So let me do this. We've gone through this. So let me show you some examples. When I was studying, because I'm showing you this is what I studied. Like I said, I went back and said, well, let me find some stocks that I know did really, really horrible. What were the signs that would have told us they went back? Do you guys remember a company called Lehman Brothers, right? And when Lehman Brothers, during the financial crisis, was going down, and the CEO came out and said, oh, no, everything is fine. We just signed a contract, all that kind of stuff, right? You remember that, Sarah? So I remember when that was happening because I was in real estate during that time. So Lehman Brothers was, it was right there in front and center. It was on the media every day. Oh, then there was experts coming out. Could they be filing for bankruptcy? Are they not going to file? And then you have these experts come out and say, yep, everything, all our sources say they're going bankrupt. And another expert will come out and say, nope, they are actually working on some things. The CEO is a great guy. He knows what he's doing. The CEO will come out and say, no, everything is fine. The CFO actually resigned. And he said, oh, no, it was for personal issues. And I'm sitting there like, who do you believe? Who do you believe? Now, back then, I didn't know what I'm sharing with you at that time. I'm like, okay. So to me, I said, I'll believe the CEO. I mean, he's the CEO after all. He's on there. He hasn't left. If he left, maybe I would have believed that it was going to go down. Okay. And it's always confusing to know who to believe. Exactly, sir. So I said, you know what? I'm not. Now, I wish I had known this stuff back then. I did not. But when I started realizing this thing with Valiant Pharmaceutical and I discovered this whole Hilltop, I said, wait a second. Let me go back to Lehman Brothers. Would I have been able to see warning signs ahead of time? And lo and behold, remember what I said? Boom, right there. Can you guys see this? Higher high, lower low at the top. And that's how we actually came up with the name, just so you know. The word hilltop, the reason why we call it hilltop is we have a higher high, okay, which is this, and a lower low. You guys seen this? Lower low at the top of a trend. That's how we came up with the word hilltop. So hopefully, if you can remember the word hilltop, just remember higher high, lower low at the top of an uptrend. That's a topping pattern. A warning sign that a crash is about to happen. They went bankrupt. I was like, wow, interesting. Maybe it was just a fluke. Then I went to the stock that I lost the most money on in my whole entire life. This stock was called 3D Systems. Okay, 3D Systems. And I remember back then, all the analysis was telling us 3D was going to be the wave of the future. It was like how everybody talks about Bitcoin right now. That's what they were talking about on 3D then. And I don't know if you can see this, but if you look very closely, there's a dot right there, a small guy waving his hand. That's me. That was me buying 3D up there because I didn't know these things that I'm sharing with you right now. Okay. That was me. I kid you not. The day I bought it, I still remember it was in the afternoon. As soon as I bought it, stock started tanking. I said, oh no, it's going to come back. It's going to come back. Started tanking. I held on. I had options on this, ladies and gentlemen. I mean, options decimated. And it wasn't like a small amount of options because I just knew, okay, this is the wave of the future. I was young back then. Oh, I'm going to make so much money. I'm going to move outside of America and buy a whole country on my own, right? With all this money I'm going to make. Yeah, right. This is what happened to me. All started with a hilltop. True story. Okay. Then I went to other companies that I traded. I said, wow, what would have told me that this was happening? Look at this hilltop pattern there. GE, I remember when everybody was trying to hold on to GE and say, oh, GE is a great company. It's been in the Dow for hundreds of years, and I remember when it was coming down because I was literally at meetup groups during that time. And, people was like, oh yeah, we should buy GE. It's a staple company, 130 something years on the Dow. It's not going anywhere. Now's the time to buy the dip. Now's the time to buy the dip. And I'm looking at this, I was like, OMG, that is a hilltop right there. That led to this stock just, and then to make matters worse, had another hilltop along the way. I was like, wow. Now I started getting to the point where it's like, OMG, I know something about the market that almost most people have no clue about. Facebook. This was in 2018. I was in Orlando teaching a workshop, and then all of a sudden we started seeing a hilltop. And I was like, a hilltop on Facebook. Why? Now, at the time, we didn't have any idea what was going on, but I said, you know what, guys? There's a hilltop on Facebook, and it's showing up on the monthly chart. Guess what? Let's stay away from it. Let's cash out. Just to be on the safe side, let's cash out. Let's see what happens. We had no idea what it was going to be. Next thing we know, they come out with this whole privacy scandal. I was like, OMG. Is it possible that somebody knew that Facebook was going to announce the scandal and they started positioning themselves for what was about to happen? By the time the public knew about it, the warning signs were already there ahead of time. And this is why I said the news to me is a little bit too late. Don't get me wrong, the news is what's going to drop it. But I'm saying there are things we can see before the news comes out that will let us know the market is ready to do something. This is the S&P 500 on the weekly chart. Same thing, hilltop right there. Boom, big drops. Okay, here's NVIDIA, hilltop. Boom. You can expect big drops to take place. Okay, the technology sector back in 2018. I don't know if you guys remember October of 2018. Does anybody remember that? That's when all these tariff situations started happening with Trump and China, right? And again, before the announcement that Trump was going to, lay all these tax burdens on China, we were all trying to. I mean, we kind of knew, we didn't know. It's like it could happen, it might not happen, but nobody knew when it was actually going to happen. And then out of nowhere, I see this hilltop. I was like, oh, no way. I said, something's about to happen, guys. Didn't know what it was going to be, but we knew something was about to happen. Okay, same thing. Get out, get out, get out is what we're telling people. Then it was announced Trump is imposing tariffs on China. Market drops. People were worried about trade war, all that kind of stuff. I was like, OMG. We had literally 1 week to get out of the trade, and the market tanked. Okay, same thing with XLP. Every single top before major drops happens, we're being shown with this Bitcoin. I remember Bitcoin in 2017. At that time, I was still skeptical about Bitcoin, I'll be honest. A lot of people were getting, I knew Bitcoin was getting crazy when my mom called me up and said, hey, I want to invest in some Bitcoin. What should I do? And I said, Mom, what do you mean you want to invest in Bitcoin? How did you even hear about this? It's, oh, my neighbors are saying how they're making all this money on Bitcoin. You're in the market. Tell me about Bitcoin. Should I buy or not? And I was like, ooh. I said, first of all, I didn't like it at the time. So I just thought, no, don't buy it. But then I went to a conference in Las Vegas by Money Show. The Money Show people put it together. And I went to that conference in November 2017. And almost half the people speaking there were speaking about Bitcoin or cryptocurrencies. So I said, you know what, let me listen into this. What is everybody saying? So they started talking about it, and then I started getting more convinced. Like, wow, these people really are serious about this whole Bitcoin situation. But the one thing I kept on telling people, I said, look, before I can make any decision, I need to see a chart. Oh, there's no chart. I said, I need to see a chart. Until I see a chart, I'm not doing anything. And so finally, somebody came to me and said, oh, go to this website. You can find a chart on Bitcoin. I went there, and this is what I saw right here. I kid you not. I saw this, and I was like, oh. I said, guys, stay away from Bitcoin. Stay away from Bitcoin. And I kid you not, people are, oh, no, I'm buying more, dollar cost average and everything. And I'm saying, I understand the dollar cost averaging, but right now is not the time to be buying. Just stay away from it. It's going down. People are like, no, I've done my research, What ended up happening? Bitcoin went all the way down, lost a huge amount. It came back since then. But again, the warning sign was there. Okay. This was it on the daily chart. Hilltop right there, right before it rolled over. Huge drop, guys. That's about a 90% drop. All because that topping pattern was there. Okay. And I can go on and on and on, but I'm running out of time. So let me just do this. I'll fast forward. Hopefully You guys get the picture. Hilltop pattern on PCG before the news, boom. Chipotle, you remember when Chipotle came out with what was that illness they had? Was it the E. coli, the breakout in the E. coli that Chipotle had? This was back in 2015. You guys remember that? Anybody remember that? When they had all that and nobody wanted to eat at Chipotle anymore and the stock just started tanking? Well, guess what? Hilltop, right there. Before the announcement of this, the Ebola, E. coli, or whatever it was called, came out. Interesting. Okay. This was one on the daily chart of the S&P 500 back in May. My nephew saw this. Dropped. Here's another one. Right when the tariffs started happening, all these stocks started showing these hilltops and hilltops. Remember Lyft? It was the Lyft, competitor to Uber. This is on the 15-minute chart. I put this up here because, again, I just want you to see, look, if you understand this hilltop, like some of my students that trade, I don't day trade, I swing trade, but some of my students who day trade doesn't mind going over here and say, look, hey, I know that the market rallies in the beginning, but there's a point in time when it reverses. And all they do is look for the ones that show hilltop on the 15-minute chart. Some of them will do it on the 5-minute chart. Let the market rally from 9:30 in the morning Eastern time to 10:30, and then look for the ones that have the hilltop. And so once they see that hilltop, yep, they know that the stock is going to end lower most of the time by the end of the day. So this happens over and over. Notice again, 9:30 in the morning, by 11 o'clock, hilltop pattern. That was your clue that for the rest of the day, chances were this stock is not going higher. Okay, so this happens over and over. You can use it on any time frame. Again, the higher the time frame you see it on, the worse the situation is. That makes sense? So any questions? Any questions? I hope that at least when I tell people, I said this one, I always tell people the stock market is not random. Okay, it really is not. The key is we haven't learned to look for the warning signs, or we're confused and we're not sure what warning signs to look at. But the stock market is not random. You can learn to identify patterns, okay, that will help you see what's about to take place. So if you understand that, you can start anticipating what's going to happen to the market. And if you give yourself a little bit more time, that's the reason why I'm more of a swing trader. Let the volatility happen, because there's going to be volatility along the way. When you factor in volatility, as long as you're on the right side of it, you will see yourself do well. Okay. So I'm going to be having a advanced hilltop workshop. It's going to be my last workshop for the rest of the year. It's going to be next week, Tuesday. I highly encourage you to come here because I am going to show you how to use this hilltop pattern to do so many things. Okay. What I did here with today was just show you this is what it looks like, right? But there's things about this hilltop that you want to know to help you even fine tune the process and give you even more insight about what's going to happen in the market. Okay, so be able to understand which hilltop are better than the others is what we're going to talk about. We talk about when we see the good ones, when exactly should we be buying? Do we need to wait 1 day? Do we need to wait 2 days? Do we need to start buying right away? Or shorting, I'm sorry, not buying, shorting right away. What are the things that's going to tell us, yep, you need to get in now, or maybe even tell us you've already waited too long. Don't chase this thing. I'm going to show you the indicators that we use to help us make these decisions because, I always tell people indicators are like tools, just like every profession has their own tools. A mechanic has their tools, a surgeon has his tool. Traders, we have our own tools called indicators. So when you have certain indicators that can help you with this, not all indicators are created equal, but certain indicators can really help you understand what's going on. And when you're able to have that, then you'll see what you can do. Okay. Absolutely, Ricky. Ricky's saying the single piece of information is quite valuable. That single piece of information is huge. It's huge to be able to use indicators the proper way. And then for those of you guys who might say, hey, okay, I didn't catch the absolute top. I showed you an example. I'm not sure if you guys caught it. where price was dropping and then it resumed going even further down. We call that the second chance drops. And so there are times where we know stocks, like for instance, all these stocks in the Chinese world, right? Companies that have been, that the Chinese government has said, do not buy them and all that kind of stuff, right? If you understand what to look for and you know, hey, wait a second, there's something wrong with this company or the Chinese government is against them, da 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 da. As time goes on, even if you miss that top, how do we catch the ones in the middle that are still going to go further down? So that way, maybe it's only dropped 40%, but it's going to go all the way down to 90%. That's what we call the second chance drops. And so being able to see those as well and jump into those, huge, huge. Does that make sense? How do we minimize our risk? This is one of the things that I like to teach because it's a look, at the end of the day, what if it starts going down and some news comes out or some news is about to come out and the market is beginning to show us that, hey, wait a second, you need to get out, you need to get out, you need to get out. Tighten up your stops, sell. That's what we're going to cover when we talk about minimizing your risk. How do we know if a hilltop is a fake one or not? If anybody understands candlesticks or even any type of technical analysis, you know that there are fake ones as well. Being able to separate the fake ones from the real ones will make a huge difference, and I will show you that as well. And if something is going wrong, as soon as you get in, because we've seen that too before, where price, everything told it was ready to go down, and then something changed. And as wait a second, it's not supposed to be doing that. Something is wrong. How do we know this and get out? Usually that would be something with companies that are going to be bought out. So you can see that it's already doing horrible. It's okay, this stock is going to go down. Kind of like how Hertz did, right? And it's going down, it's going down. And then all of a sudden, there's a merger working underneath or some type of loan that they're going to be getting underneath the surface that nobody knows. And then all of a sudden you don't even know, again, before they announce it, you start seeing, not that you start seeing, you see on the chart that something is going wrong. It's like, it's not supposed to be doing this. And I always tell people, look, when you see something wrong, get out first, ask questions later. Because literally a day, 2 days, 3 days later, boom, you see the stock just gap up like crazy. And it's like, wait a second, well, what happened? Oh, okay, they got this loan or this, and you hear the news tell you this is the reason why the stock did well today. But again, there are warning signs a day, 2 days, 3 days before that happens. You want to know what those are, especially if you're going to be shorted. Okay. And then how do we find them? I'll show you how we scan for them every single week so you can find stocks like this. The beauty of this is you can use them to find stocks that are going to drop as well as stocks that are going to go higher. Now, I usually charge $2,247. I'm going to charge only $997. Now, I'm a guy that's very, very serious, okay? Everything that when I say I'm going to reveal 100%, I'm so serious about that. And I hope that even what I've shown you today is like, look, this is not me just coming up with stories. I can show you things. I always tell people, we don't hope, wish, or pray when it comes to the stock market. We see things, we know it, and we expect it to happen. And so for those who are really, really serious, I am going to give you guys, at first I was going to do 24-hour special, but 48 hours, okay? For the next 48 hours, so that's between now and Friday at midnight. If you were serious about this and you really want to know how to tell these tops without having to guess anymore, okay? And be like how I was on that podcast when I said, I am 100% sure the market is going to go higher, okay? I will give you the incentive to make that decision. $497, and I'm also going to do this. You can even pay half now, take the course, and then pay half after the course is done, or a month later. I would do that for you because the information on how to tell, so you never have to worry about the next bubble, okay? You know when the bubble is actually popping. It's so many times I hear people, oh, the market's going to crash. I'm like, hogwash. They have no clue. And I'll tell my subscribers, keep on buying. Keep on buying. Don't even get worried about what they say. And people come to, oh, I heard this report here. I said, forget the report. What is the chart telling you? They're telling you this one thing, but look at what the chart is saying. And I said, until we see what the chart says, don't do anything, okay? And so if you if you're serious about these, ladies and gentlemen, I'm saying take advantage. It's our last class for the year. Take advantage of it. Let this be your Christmas bonus, okay? So that you can prepare yourself and get ready for 2022. There's no time better than now to say, look, let's end out the year, no matter how 2021 did, let's end it out on a positive note where we learn something that if you learn nothing else this year, you can at least say, I learned how to identify tops. I did not make this up when I told people on November 22nd that the market was going to drop. You'll be able to do so by yourself too. You won't even need me to tell you this anymore. You will see with your own two eyes. And that to me is the best thing ever. So take advantage of it. If you wait till after Friday and it goes back to $9.97, we'll break up the payments if you want us to break up the payments. But I'm saying take advantage of the fast offer as soon as you can. It's the cheapest I can give anybody this information. Thank you so much for being on this call. I want to wish you guys a very Merry Christmas and a Happy New Year. I hope to see you guys on Tuesday. Take advantage of that and you will see. What platform do you run the scans? I'll show you where you find that when you come in on Tuesday. Okay, I'll show you where to see that. All right. So thank you guys.
Amazing. Thank you. Thank you so much. That is fantastic. Okay, folks, you're going to get emails from everybody. There is a replay going up, and you want to get in on this. I'm sitting here with my mouth open going, oh my gosh. Wow. I feel like we just got the insider secret of the year here. So, Wally, thank you. And
You're
I
welcome.
appreciate you
Thank
being
you.
with us.
Absolutely.
And so,
thank you.
Merry Christmas, Happy New Year, Happy Holidays, whatever you like to hear. And then I hope you will join us again. I've really appreciated your presentation. All right, guys, I'm wanting to, we're going to wrap it up now. I appreciate you staying and until the end here with us. This has been a presentation of tradersexclusive.com. Our Twitter is @options_info. You can get news, education, and trade ideas, replays. It's been a great year. Hey, if you know someone that you would like to hear at one of these live events, we do them twice a month, first Wednesday and third Wednesdays. I would be happy to. You just need to email me at support@tradersexclusive.com, and I would be happy to reach out to them to get them on for you. So I want to give big thank yous to our presenters for sharing with us today, and I want to thank you again for attending. From all of us at Traders Exclusive, we hope you have a fantastic holiday season. And this is Sherry saying goodbye and trade well.